Oh, hey, hello there. What's up, everyone? How we doing? Spencer, AB, we got a good show today. Y'all asked for some more SPAC content. You asked and we delivered. We're going to start the show off today with a good old helping of SPACs. Are you ready, Aaron?
I'm ready, Spencer.
All right, let's start the show and bring on our first guest. This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Call somebody, because Robinhood's in trouble, okay? Let's get Hammond on the show, talk some IPOs. Jake Wujastyk from TrendSpider. We have
breaking news.
Yeah, where is Chris K, our SPAC guru? He's here. Let's get him on the show. We got a lot going on in SPAC land. We got some updates, and we're going to have our guest, our interview, who you may have heard of if you're into SPACs. We'll let Chris talk more about that. Let's bring Chris Catchy on the show. Yes, there he is.
Hey, what's going on, Spencer, AB? Great to be here.
Great to have you back. Not that you ever left, but we're on. Here we are. Okay, so we're going to be doing these weekly segments more than one time a week. We got a lot going on in SPAC land, Chris. So why don't you just start by telling us about it? We'll cover as much as we can cover before our first guest comes on. Actually, before you even get to that, tell the people who our guest is today, because this is a big name.
Yeah, I mean, anyone out there who's followed SPACs, you're going to know this name, of course. We've had him on SPACs Attack before. We will have Niccolo Masi, the CEO of Dmyq Technology, joining us shortly. And joining him will be Will Marshall, the CEO of Planet. So we're going to be talking about that SPAC merger between Dmyq and Planet. So Niccolo Masi out there, I mean, he's considered the SPAC king, the SPAC GOAT by many, because he has delivered with his deals in the past. So definitely excited to welcome Niccolo back to Benzinga TV.
Excellent. In the meantime, Chris, let's get to some headlines.
Yeah, so, the first headline, speaking of Niccolo Masi, we've got Genius Sports. So Genius Sports announced a partnership with FanDuel. So Genius will provide the official sports book and media content plus NFL advertising inventory for FanDuel now. So FanDuel designates Genius Sports as a preferred programmatic marketing partner. So remember that FanDuel is a partner with the NFL, and Genius Sports, of course, has the official data feed for the National Football League. FanDuel is the #1 sportsbook and the largest mobile betting operator in the U.S. This is a huge deal for Genius, and it is signed the day before they report quarterly earnings. So Genie tomorrow, GENI, quarterly earnings tomorrow. And if you watch Sport Radar, SRAD, of course, had earnings recently that were fairly strong as well. So I expect a strong report from Genie tomorrow. And of course, this was a Niccolo Masi SPAC deal previously. What do you guys think? I mean, we're hearing record numbers being bet on the NFL, on sports in the months of September and October. I got to believe that Genius Sports is going to have a nice looking quarter.
Yeah, probably, right? But unfortunately, it's like not, it doesn't matter, right? Like the market doesn't care about that.
Yeah, Spencer, great point. We've seen, DraftKings fall, we've seen Penn fall, but this is why I really like Genie, right? Because those companies are beating each other up, right? Competing for market share. They've got razor thin margins because they're just throwing out free promo money. I mean, I know AB knows all about free promo money, myself as well, and Mitch. We've talked about that as before. You're getting free money to bet on sports, and then those companies are not making profits. Genie is making money because they're providing that data to these sports betting companies.
Yes. Yeah, so is the move here by the betting companies, Chris, that they're willing to spend that money in promotions, in advertising to try to lock in customers now so that those customers have the brand loyalty in the long run?
Yeah, I think absolutely. It's similar. Netflix did this for years, right? You spend a ton of money to acquire your customers. You get that loyal customer base, and then eventually you're going to, be able to focus on margins and profits. We're seeing DraftKings and, especially Penn get more into media, right? And that could be another area to watch. But really, I think there's going to be consolidation in sports betting, right? I mean, there's so many players out there competing for market share. I think eventually they start to, acquire each other, to go after the total market segment.
And what's exciting is whatever the first deal is, whatever the first domino, it's going to create like a massive domino effect. And it's going to be like a land grab. It's going to be like one deal gets announced, then like 5 deals will get announced, right?
Yeah, definitely.
Whenever that happens. All right. What else we got going on in SPAC land, Chris? We got some more stuff.
Our big mover today, Astra Space, ASTR. This is a space company that went public via SPAC. They completed their first commercial orbital launch Friday, which was a mission for the U.S. Space Force. This was a historic milestone for the company. They became one of only 4 privately funded companies to reach orbit. That list includes SpaceX, Rocket Lab, and Virgin Orbit. They also reached orbit faster than their rivals, including SpaceX. So that is definitely a huge milestone for them. Their founder, Chris Kemp, told investors that the company is just getting started. So Astra plans to begin monthly launches in the future. They can mass produce a portable launch system to launch from anywhere in the world within 24 hours. Huge backlog, huge pipeline of deals, and they said that their next launch announcements will be coming soon. So no surprise, ASTR rocketed on up today. We're still up 30% today. Big news over the weekend for space and for SPACs. So
can you make a note to update us when they announce their next launch? Because if every launch is going to be like this, 33% move, then like sign me up. You know what I mean?
Yeah, I mean, this is the catalyst that, we used to talk about on SPACs Tech, right? The space stocks, if you follow the story, I mean, Rocket Lab just did a launch. Their stock was up. Astra, their launch was up. When Virgin Galactic launches to space, you see the stock go up before the launch. I mean, if you follow that story, it's definitely, you can see it on the chart that those launches. But on the flip side, Spencer, the last Astra space mission was not successful. If any of you watched that, their rocket actually kind of went sideways. And the stock definitely did not react positively on that launch.
Oh, that's okay. Then, all right. Then that's part of the game.
It's not always a winner. I mean, that's part of the risk, right? With them, but
can always be a winner. All right, a couple more here, and then we'll bring on our first guest.
Yeah, another SPAC news, something we always say to watch, right? And this is something we may see more now with the number of SPACs out there. We did have a SPAC on Friday, ZGYH, that announced that they opted to liquidate instead of extending their vote. So this SPAC will no longer acquire a company. They're done. They are going to liquidate their common shares. So each shareholder will get $10.31. That's the net asset value in the trust. The warrants become worthless. So this is why we always talk about warrants being high risk, high reward, right? If the company does not reach a deal, the warrants become worthless. And then notable that this is a SPAC that counts Patrick Orlando as the CEO. He is the same CEO of DWAC, which of course is bringing the Trump companies public via SPAC. So of course that made headlines on Friday as well.
All right, we have SPAC going off the board saying, never mind. What else do we have?
And then I write a weekly article, data from Fintel, that is the 5 short squeeze candidates for each week. So notable that 2 SPACs make that list this week. Altimeter Growth Corp, AGC, which is merging with Grab. They have 38.8% of shares of their float short. So that's notable because they actually have their merger vote coming up later in November. And then also Tattooed Chef, a plant-based food company that went public via SPAC. Their short interest now 35.7%. So 2 notable SPACs out there, heavy short interest. And with that being said, AGC did set their merger vote with Grab for November 30th. We also got ATHN setting their merger with Heliogen for December 28th. And ISOS setting their merger vote with Bolero for December 14th. And then we did get a couple mergers approved late last week, including DDMX which is merging with Codere Online, a international sports betting company. And then one to put on both of your radars. I know we talk sports a lot. Rogers Communications, publicly traded, right? RCI. They own the Toronto Blue Jays and some other sports assets. They are actually now saying that they are working to sell the Toronto Blue Jays. So the Blue Jays are being put up for sale. And we do have several SPACs out there that are targeting possibly a professional sports team. Among them, we have PUCK, SLAM, BHSE, and others. So what do you guys think? I mean, Spencer, AB, I've said it for a long time, that some of these sports SPACs really want to bring a sports team public. Do you think we see that now with the Blue Jays being up for sale, or is this just going to be, another sports team acquired by a billionaire out there?
Yeah, there was the rumors with the Fenway Group, right, and the Red Sox. I don't know about the answer to your question, but what I was gonna, I guess the answer is probably yes. At some point, we'll see a sports team go public via this route. But what I was really gonna say is I am decidedly neutral on the outlook for sports teams going forward. On the one hand, valuations for sports teams have basically never gone down in their history, right? They just go up. That's what they do. There's only so many of them out there. I think maybe last year during COVID was maybe the first time ever that there was that they paused for a moment, but valuations always go up. So that's obviously a good thing. On the other hand, sports teams get a lot of money from RSNs, regional sports networks. And there was a very good article over the weekend by Alex Sherman on CNBC, basically about how that business is under attack and is going to eventually go away. And that is a major source of revenue for these teams is they get paid a gajillion dollars from these RSNs who pay for the right to broadcast their games. And the model's not working, and no one's happy. And maybe the solution is sports teams do their own direct to consumer streaming thing. I don't know. Yeah. But that is a major that's a gravy train that is bringing a lot less gravy now. So yeah, I am decidedly neutral on sports teams.
That's a fair point, Spencer. And what I would say is, I would expect the teams to kind of launch their own. I know Sinclair Broadcast, which owns Bally Sports, several of the major sports rights out there. Yeah. They actually said last year that they planned on launching their own streaming platform. So if you subscribe to the streaming platform, you would get access to all those different regional networks, including Bally Sports Detroit, home of the Pistons, Red Wings, and Tigers. That's the one that I would want to pay money for, being a Detroit sports fan. But that's a fair point there.
Yeah. So I don't know how you feel about that, AB, but gravy train bringing less gravy. On the other hand, valuations only go up because it's what they do. So,
all this gravy talk the week of Thanksgiving. I mean, nice job, Spencer.
Hey, I'll be here all week. Speaking of that, today's show sponsored by Vitamin Water or not, or we're open to it. Vitamin Water. Just let us know.
Who owns Vitamin Water? Is it Coke?
50 Cent.
Coca-Cola. Hey, oh.
Wait, didn't 50 Cent? Oh, he sold it.
50 Cent sold as part of that.
He sold it.
He founded it, or if he was just an early investor.
He was an early investor through that marketing deal. And I don't know if you guys knew this, but the founder of Vitamin Water also was the founder of Body Armor, which just also got acquired by Coca-Cola. So that founder is doing quite well for himself, Mike.
I'm going to stick with my story that 50 Cent was in the lab co-founding Vitamin Water.
It's a better story.
I thought he was in the club. He was in the lab now?
Well, yeah, he went from the lab to the club. That's the whole thing. Okay. Let's bring on our first guest here, Chris. We got two of them here. Give us a re-intro. Who do we got?
All right, guys. I teased it at the top of the show. We're super excited. We have a great interview today. Joining us on Benzinga Live, we have Niccolo Masi, the CEO of Dmyq Technology. And, of course, joining us on the show, we have Will Marshall, the CEO and founder of Planet. So Planet is going public via SPAC merger with Dmyq. Welcome to the show, gentlemen.
Hey.
I think you're muted, Niccolo.
Saying great to be here, Chris, as always.
There we go.
Excellent.
Now we can hear you. Awesome. All right. Well, let's dive into questions here. You know, I've interviewed you both before. We've talked about Planet, but the stock is definitely getting more interest. So I know there's more people out there that want to hear more about Planet, right? So, Will, let's start with you. You know, just give a brief overview. What is Planet all about?
Yeah, well, good to be back. And yeah, just a quick story. Planet, we have 200 satellites. They do Earth imaging. We actually image the entire landmass of the Earth every single day. It's like a line scanner for the planet, and we now have 1,500 images for every point on the Earth's landmass. And what we do with that data is provide it to various companies and governments to help them make smarter decisions. We liken it to Bloomberg, but for Earth data. And so we take this imagery, we add various analytics like extract out roads and buildings and crop yields and various other things like that. We provide that to various entities. So I described last time, we have use cases mainly in places like agriculture, where we can tell crop type, crop yield. That helps the farmers improve crop yield by 20 to 40%. We work with the biggest agricultural companies, monitoring millions of farm fields every day. We work with civil governments on things like tracking and helping improve response to disasters like after floods and fires. We work with, and we've got some exciting new developments to announce that we recently announced, which we can tell some of your viewers here today. But yeah, that's the quick picture about Planet and what we do. It's just over $100 million in revenue last year, so we're a scale business, and we're excited to be going public with our partners here, Dmyq Technologies.
Awesome. With that, I turn to you, Niccolo. Anyone who's followed SPACs, knows you well. You've done several deals. You had your choice of so many companies with this Dmyq merger. And within that, there's also so many space companies and satellite companies. So what is it that makes Planet so unique, and how are they so far ahead of the competition in terms of satellites?
Well, look, as we've chatted with you before, we like all-weather businesses, and we fundamentally think that Planet is the ultimate thing behind a thing business. We see all of the value, frankly, anything to do with space coming from data long-term, and Planet really is not just the leading data player, but I'd argue that they're a quasi-monopoly business if you think about the daily whole Earth scan. There is nobody else that's anywhere near them. When you have 200 satellites in orbit and your next biggest competitor has like 5, Will can rattle off some metrics maybe in a second here, but we've never seen a business with as commanding a lead in years over anybody else attempting to do something adjacent, right? No matter how much money you have, it's going to take you 5, 6, 7 years to get to where Planet is in 2021. And of course, we're not standing still. We're going to use all this money on highly visible, well understood investments like growing the sales force, growing the software business. And so we think this business has, frankly, the highest barriers to entry we've seen. And it's kind of the ultimate price giver, Chris, because they have proprietary data all wrapped up in this data subscription kind of Bloomberg terminal, if you will. And so we love the TAM of the business. If you look at all the verticals Will just touched on, we think he can get to $1 billion of revenue through just one of those verticals, and he's got 6 or 7. But at the end of the day here, the world has a lot of energy around sustainability, but this business is a fantastic company, even without that tailwind, because it's a 9-figure revenue play that ultimately has, I'd say probably the strongest shareholder base you've seen in the data space or the space category. And it's all wrapped up with an 11-year track record that Will's been building here. So tremendous momentum with this company, a tremendous decade ahead.
Yeah, perfect. I smile as I saw that chart pulled up on the screen. Like I said, Dmyq getting a lot of attention out there going into this merger vote. Will, we chatted before, and you mentioned, that there's some new news to share. So one of the items I know was that Planet recently announced the acquisition of VanderSat. Can you tell us, what is the thesis behind that acquisition, and why is it so important for Planet's growth going forward?
Well, look, the first decade of Planet was all about the hardware and building up the satellite fleet. We had to build the largest fleet of satellites in human history and a bunch of other things, no minor accomplishment. The second decade of Planet is really focused around the software, and that's pulling up insights and information from the imagery to make you more closer to what the user needs. We've mainly been working with large enterprise, the big ag companies, the Googles or the US governments of the world, and that's already a great business, and there's billions in that. But there's also, as we extract out value, we can allow a lot more users. Users don't have teams of people that have geospatial expertise, but a long tail of smaller companies in many different sectors, if we can extract out value from the imagery which it can provide. So Vandersat is a company that specializes in satellite data insights and analytics. They have some really unique IP. It's a great tuck-in acquisition, enabling us to go faster on our product roadmap on the software side. And it's particularly relevant in agriculture, which is already one of our core markets, but also insurance, which is a new and emerging market case for us. And this relatedly, just so you know, we've done a few recent partnerships. One that sort of relates to that is that we did a partnership with USDA, the US Department of Agriculture, where they're using our data to help underpin the crop reports that they do across sort of like the industry crop reports of the United States. The cool thing is exactly the same data, and that data of these crop reports is used by hedge funds to pin their bets on markets, on various commodities, agriculture commodities, obviously in this case. And we can actually do that more regularly and for the whole world. This hints at our value proposition for another market, which is finance. You know, we have huge alpha on commodities around the whole planet. Like we can tell the soy yield of the world before anyone else, or the wheat yield before anyone else. And again, we can do it on a global basis and more regularly than the government crop reports. So that's helping us to pioneer the use case that can help us get into finance too.
Yeah, actually, I want to ask about that because I was listening to a pod, sheer coincidence. I was listening to an interview over the weekend with the founder of Moderna, right? And they were talking about how they had a thesis decades ago. They were going to create a Bloomberg terminal for biotech, right? And create, amass all the data and sell it to the biotech industry, and it didn't really work. Right. So the idea of like creating a Bloomberg-like terminal for industry-specific things has been out there in the past. Doesn't always work. Have you proven out that there is like viable use cases here, that you have like viable customer base for the product?
Well, already we have 4 established vertical markets. Yes, so I mentioned in agriculture, we already serve the biggest names in agriculture, and those are expanding rapidly. So we see a significant product market fit there. In defense and intelligence, that's where we help countries with security, like border security, civil government, where we help countries and local and state government with disaster response, with permit enforcement. These are all established use cases, and then mapping is the final one. We work with companies like Google to improve the maps that you see online, and we do that all the time. Yeah, I mean, look, in my mind, I strongly believe in that Bloomberg terminal for Earth data. And remember, it's not a specialized thing. In fact, our data is relevant to a lot of vertical markets, those 4 and a bunch more, like insurance, like finance. And so it's not an industry specific thing. It's this Earth data is powering 2 major global transitions of the economy. One is the digital transformation, and second is the sustainability transformation. So the digital transformation is where big data and AI are unleashing efficiencies on whole trillion-dollar industries like agriculture. We're doing with agriculture. And sustainability transformation is how all the countries and all the companies want to measure their environmental goals and their emission standards and their protect their parks and track their sustainability goals. And Planet's data is not just relevant to that, it's foundational to that transition to a sustainable economy, because the first thing you need when you set those goals is the data to measure where am I and how am I going. And so just like the financial data that powers Bloomberg, that enables people to make smart decisions on stocks and trades, is exactly the same as what we're providing, except it's not limited to one sector of financial data services. It's a wide variety of markets. And secondly, it's based on a unique set of data that's proprietary to Planet, based on our satellite fleet, unlike Bloomberg Terminal, which is mainly aggregating open source, publicly available financial data. So I actually think it's Bloomberg plus plus. Time will tell, but I have conviction on that.
Niccolo, anything to add there? It looked like you wanted to jump into Spencer's question there.
No, I mean, look, I think it's important for people to realize that Bloomberg is a data aggregator, whereas Will's business is proprietary data. I said before, we like all-weather businesses. Planet is the ultimate all-weather business because it's a monopoly, right? At the end of the day, nobody else can scan the whole earth every day. So he has pricing power. We're very confident in this business's momentum and ability to perform kind of regardless of what happens here. Ironically, Chris, this business, is kind of like the Apple in my mind of the space or satellite sector, in the sense that, as Will said, he focused the first decade on building his own hardware. Now he's building his own software and AI on top of that. He's vertically integrated, right? So Planet effectively assembles their own satellites. They even design their own components. And that makes them able to innovate faster than everybody else. It ensures their margins are better than everybody else's. And we expect it means that they will continue to pull ahead of the pack. So this is a sector that I think will end up being a winner takes most, if not all. And unlike other data plays, it's their own data. They're not buying it from somebody else. They're controlling it from the point of capture. That's a really important point, right? He has almost an infinitely high gross margin, if you will, asymptotic towards a very high number, because he can resell that data on a one-to-many basis. And has no royalties. It's his own business, his own data, soup to nuts.
I guess that would be a key difference. Yeah.
Niccolo, we've covered the SPAC industry for a long time, and one of the things I always talk about is, analyst coverage. And out there in SPAC land, right, a lot of these companies don't get, analyst coverage and price targets until the merger is completed. Now, here we have Planet, where I'm seeing, several analysts jump out with price targets, coverage. I mean, $15, $17 and more. Also, I saw a New York Times article, talking about Planet and how big of an impact it can have on the future. So Niccolo, I'll start with you. What kind of validation, does this give you as an investor, seeing these price targets and this thesis of Planet building a better future?
Well, look, we did an analyst day, and I think I said this, at least in social media. It was the best attended one we've ever seen. You have 4 people that have picked up coverage prior to the vote. That's a record for DMY. It's probably a record for SPACs in general. I don't think anyone's done better than that, for sure. Some people get to 2. We've gotten to 3 before, but never 4. I think it's safe to say that there's going to be plenty of big guys picking up coverage, like Goldman Sachs and Morgan Stanley, who are both partners with us and Planet after the vote. But the validation, as I mentioned a couple of minutes ago, with the shareholder base is tremendous. You have Mark Benioff in this pipe. You have CPPIB. You've got BlackRock, you've got Coke, you've got people that love this business for a myriad of reasons. And I believe, Chris, that like with all the businesses we bring public, but this one, even more strongly, if you could, this is a long-term 10-bagger, and it probably is a long-term 100-bagger. Will Marshall and his co-founder Robbie Schingler are been doing this for most of their lives, and I believe they're going to be doing it for the rest of their lives. And so the reality is, it's a really long-term vision. The world needs Planet, but the Fortune 1000 needs Planet as well. And so I'm expecting everybody in the Fortune 1000 to be a customer. The question is just how big. And Will Marshall, more than anyone else ever met, is here proving you can be a great business and you can do good, for humanity and this planet at the same time. So it's a very special mission and a very special company. And I think there's a lot of reasons why people are excited about it. And you can see it in the stock price graph, obviously.
Will, same kind of question to you, right? I know you probably don't follow, the analyst coverage, the price targets maybe as much, but seeing an article like that on the New York Times saying how Planet, is what's needed for the future in terms of ESG, sustainability, right? What kind of validation and what does that mean for you as the founder of the company to read something like this?
Well, it means that the world is really beginning to realize the value of Planet's data and the relevance to our transition. Yes, I was at the Glasgow conference, the climate conference in Glasgow a couple of weeks ago, and countries and governments as well as companies made ambitious targets like ending deforestation by the end of 2030, 132 countries signed up to that, stopping methane emissions or reducing methane emissions, protecting the oceans, and so on. And we really have to make these commitments real. Of course, the first step to making those commitments real into action is measurement, because you've got to measure those forests to make that commitment. You've got to measure the methane to make those commitments. And so immediately, all those companies and governments need our data to do those actions. And what Tom Friedman in the New York Times was getting at was just that this is the natural transition for the next step for all of this momentum in sustainability. So it's very gratifying to see that sort of understanding get out there, that Planet's data is central to that next phase of sustainability, because that's, of course, the whole reason we founded Planet. We see a massive business opportunity serving that digital transformation, like in agriculture and other places. We also see a big opportunity in sustainability. So, it's one of the reasons I think retail investors will love Planet is, of course, we're a data business that has got high growth and high margins, and I think it's a modern kind of business that people are excited about. It's got the space piece that is cool because we've got satellites, and it's just fun to observe, and the pictures are compelling. And then finally, it's really relevant to the predicament we find ourselves in as a species on this planet, needing to take care of the planetary emergency that we've helped to create since the Industrial Revolution. And so Planet's data is, again, not relevant to those transitions. It's pretty much foundational to them.
Perfect. So, Will, you mentioned that there were some new things. You mentioned a couple partnerships. We got the acquisition. So we did have that investor day. And I love Niccolo's comment about the analysts. That was going to be one of my questions, right? Are we going to get more analyst coverage? And of course, he nailed that one down already. So, Will, what are the key takeaways for anyone who didn't tune in to that investor day? Why they should be so excited about what Planet is building?
Well, we did make a few updates, and let me just relay 3 partnerships that were really exciting that I haven't already mentioned. One is with FEMA, the Emergency Response Agency, the US government, and our partners there. We're working together to help with disaster response. We've been doing a bunch of work in disaster response in Germany, here in California. So in Germany with the flooding, here in California in the wildfires. And our data can help with the immediate response of first responders to those disasters, as well as the prediction of those events in the future. So we've tracked all the trees in California, and therefore can help them to determine where to put fire lanes and other things to prevent future megafires. So we're working with emergency response agencies like that. We also announced an expansion of our partnership with NASA, significant expansion there, and that's all about getting our data into the hands of researchers. Those researchers do important science, especially in the areas like climate, but also they produce and help validate use cases in agriculture, in forest management, and other places that then turn into business propositions as well. And then finally, we expanded a partnership with Google, a new segment. We already support them on maps. That's how the maps that you see online stay up to date. But this is a different one with Google Cloud. It's a go-to-market partnership where it's our data and their compute infrastructure merged together to attack certain vertical markets that we see as really compelling. So one of those is in ESG, so tracking supply chains for companies. We've seen many companies that want us to help track their supply chains, make sure it comes from a sustainable source according to their policies. And this is a go-to-market strategy where it helps both Google and us. It's a feather in the cap for Google because it's cool data that other clouds don't have, and it's great for us because it helps tap into a large sales force at Google Cloud, much larger than our own. So those are 3 cool partnerships, just to mention a couple.
Niccolo, same for you, the investor day, right? So you did, your deep dive into this company before the SPAC merger, and now we've had several, new updates, acquisition, lots of new news from Planet, right? So what is it that, you're most excited about in terms of some of these new announcements from Planet?
Well, you can kind of see why we're so excited with the business is this democratization of access to the whole Earth scan, Chris. I mean, this industry used to be an industry. Will's really invented this industry in its current form, but 30, 40 years ago, satellite data was about a government tasking one satellite to sort of sit on top of a very narrowly defined area. Will has sort of effectively upended the entire model with Planet by saying, hey, I can democratize this. You can do this off of a web portal. Someday you may do this off of, off your phone, off an app. And he's brought the price point down to the point whereby even small businesses can be customers today. This is truly revolutionary if you think about where this industry has gone, where it is today, and imagine, where it's going. So these partnerships are just the tip of the iceberg. I'm hugely excited about the team that, Will's assembled. People that run product for Twitter and Instagram, amongst others. And so this continued democratization, I'll emphasize what I said a couple of minutes ago, not just all friendly governments, not just the Fortune 1000, but I think you're going to see ultimately individuals, just like individuals have Bloomberg terminals, individuals will someday be customers, as well. And so this lead that Planet has is so commanding that I expect they're going to be the 800-pound gorilla of the category. We're going to use the public company status that we're getting in a week or two to enable us to ultimately, consolidate the sector. He's going to be able to move a lot faster now that he has more capital, has the public currency, has the visibility. Because, Chris, a lot of the news that gets reported about Chinese missile silos, that's all Will's data. people have barely heard of Planet. We're just getting started here, and so great things are ahead, in the coming weeks and months and quarters.
Will, I got to ask you one more question here. I mentioned in the headlines, of course, our big mover today is Astra Space. So Astra had their successful launch to orbit over the weekend on Friday. The stock is up big on that. You actually have a partnership. Planet has a partnership with Astra that was signed in May. Can you just tell viewers, who may not be familiar about this partnership, what that partnership entails and why Astra reaching orbit could be a big factor here for your company?
Well, look, we're excited about working with Astra. Astra is a nano rocket company that is building and just got to orbit on Friday. It's the first time. We believed in them from the get-go. We spent a while collaborating, as you saw, signing a partnership agreement to use their launch vehicles before even they got to orbit, because we believed in them and their technology. We make some early bets like that on companies that we think can help us in the future. There's a proliferation of nano rockets. We've obviously used the Rocket Lab in New Zealand, as well as the reduction in launch costs, especially from SpaceX. And we will continue to use that and encourage that, because, of course, the more launch providers there are, the better. I think Astra's in a great spot they're tackling something different than reusability. That is the main thing that SpaceX has. They're tackling getting mass production of rockets such that you can have almost one a day. That's a big thing for us, because it means we can launch the satellites when we want, where we want. So that's cool. But I would also hasten to add, this is, it really is a space renaissance going on. The rockets are getting cheaper. We're seeing the billionaires going to space on their own rockets, like Bezos and Branson. As well as Elon's SpaceX. But the unwritten story, I would say, is in the satellites and especially the data. So the big thing that's gone on, so we've seen a 4x reduction in satellite costs, launch costs. We've seen 1,000x improvement in cost performance of satellites. And what that is, the upshot of that is vastly more data. So we are generating more than 10 times more data about the Earth than we did just 5 years ago. And so with that upshot of new data sets about the planet, it's all connected to the Earth economy. As I said, the digitization of the global economy and the sustainability of the planet, because we're tracking all of natural capital around the planet. And so the biggest upshot of the space renaissance is less the billionaires going to space and that sort of stuff, although that's cool. It's more the data revolution that is powering our Earth economy.
Yeah, and Chris, I just want to point out one more time for everybody listening, there's a lot of ways to get things into space. There is only one planet that captures 100 times more data than anybody else, right? So this is my point on the value chain. Like, people make news with tourists. The history of value chains is there's not a lot of money in tourism. There is a lot of money in data. There's a lot of profits in data. There's a lot of enterprise value and market cap in data. And I don't think it's an exaggeration to say that, Planet's probably going to be if not one of the very most valuable businesses, anything to do with extraterrestrial, anything in the coming decade is my prediction.
We had a couple good ones from our chat that I want to ask. This one's from NCal. He's asking if Planet's got any collaboration with any infrastructure build projects, or if there's any metaverse plays here. So
we do some work tracking infrastructure builds for energy companies, for example. Yeah, I mean, we can do automatic detection. Is there new buildings? Is there new roads? They plan, and companies use that to track their progress on big infrastructure projects around the planet. We have seen that. We've also seen, relatedly, a permit enforcement application where counties and states will use our data to go, who's building what, and did they get planning permission for those things? And then they just send them fines in the mail. It's like the speed camera for regulatory enforcement. It makes them money, it makes us money, it's all good, and it enforces whatever regulation that's important that then helps pay for schools and hospitals and things in those counties and states. So we think this is really cool. But yeah, nothing with the metaverse.
Not yet.
I think you're being a little bit humble, Bill. If you keep everybody's maps straight, by definition, people need maps to have things like Pokemon Go work. So
that's a good point. I mean, Pokemon Go use Google Maps on the back end.
Exactly.
And we help to make the map up to date. So sure, there is a connection there. And
there's always a connection. There's always a connection.
We're the ultimate thing behind a thing. I'm telling you.
Thing behind the thing, Benzinga.
Yeah, that's it. And then Born to Be Free wants to know if we'll be able to measure the exact amount of carbon being released by countries. Speaking of enforcement and regulation, so we can know who the bad apples are.
Absolutely. This is a critical area. And in fact, one thing that was apparent in the Glasgow conference was that no one had that measurement system. We do now have the measurement system for forests, for ocean protection, and a number of other things, for agriculture, transition into sustainable agriculture and things like this. But no one's measuring emissions, and certainly not accurate enough. So we just announced earlier this year that we are going to launch a third fleet of satellites that's dedicated to measuring emissions. It will be able to measure methane emissions, which is an untold story in emissions. Everyone talks about CO2, and it can measure CO2 emissions. And both of those at the point source. So it'll be able to say this factory at 30-meter level is the one that is producing the methane, or this oil, or this gas pipeline has a leak, or this farm has too many cows, or this waste facility is producing the methane. And we'll be able to pinpoint that at the level that is accurate enough to basically tell 90% of those emitters around the whole planet. And then, and only then, will we be able to keep track on this. And just a few weeks ago, we announced that Mike Bloomberg has given us another grant of $25 million to boost the other consortium here. So there's a total of $125 million going to the consortium approach to do this. Ourselves building the satellites, NASA JPL building the instrument, which is a very sophisticated instrument, and an NGO called Carbon Mapper that pulls it all together. And that completes the funding to get the first few satellites up, and then we will be building a fleet of those to monitor the whole world for emissions. It's going to take a couple of years for that, but it's a big and exciting future. And of course, it's not just relevant for the regulators, so the governments need that data. It's also relevant for the oil and gas companies and others that want to get ahead of that and ensure that they don't get fined.
Last question from the chat.
Even the founder of Bloomberg agrees that Will has proprietary data.
Oh, that was good. That was good.
That's a good point.
That was good. Singapore the wrong. Last one here. Just wants to know about, I guess, why you. I guess you already kind of addressed this, but why you chose to work with SpaceX and renewed that contract. Although you said you work with everyone, so.
Yeah, we work with SpaceX. Of course, they're one of our most regular partners. We have used their rockets, I think, 7 times, launching a couple of hundred satellites. It's a big relationship, and they do have really sophisticated launch vehicles. They're the cheapest per kilogram to get objects in space. But most exciting for us, they're very nimble. So, for example, last year we wanted to launch some satellites into an inclined plane, 2 sets of 3 satellites on 2 SpaceX launches. We did it within from zero email to Elon to satellites in space within 6 months. And that's unheard of in the space arena. And that's because of the agility of us building the satellites and the agility of them adapting their fairing and other things for our satellites in such a short order. So yeah, that's the kind of exciting thing we can pull off with those. And now that enabled us to revisit any particular place on the planet up to 12 times per day. And that was because of this unique partnership between us and SpaceX. So we do work with them quite tightly.
Awesome. Well, guys, this was so much fun. Again, getting some behind the scenes look at Planet here. So Planet Labs merging with Dmyq, that merger vote December 3rd. So Will, we're looking forward to seeing this merger go through. And thank you for joining us on the show today. And also, Niccolo, as always, thanks for joining us on Benzinga TV. And I know you've got a big week. We've got DMYS units splitting the common shares and warrants today. And also, as I said at the top of the hour, we have Genius Sports reporting earnings tomorrow. So super excited for you in that area as well.
Thanks, Chris. Always a pleasure to be here, and look forward to Will and I coming back maybe after the first earnings call.
Definitely. Thank you guys so much.
Thanks a lot, guys.
See you later.
Wow. Okay. So a lot of let's talk about that for a second. That was a very, very bullish interview. Look, these executives are convincing, right? That's their job. I am fighting myself a little bit here because I always try to be skeptical, right? I always try to be skeptical and think of it's easy to be bullish. I think it's harder to think through things a little bit more. I'm looking for reasons not to like Planet Labs. I don't know if I have any right now.
Yeah, I don't have any, Spencer, and I know you want to find the bear case.
I'm trying to find the bear case. I'm looking for it. If you have it, let me know. I don't know if I have it right now.
So I love
convincing.
Space stocks, right? And I think space is an exciting future. And this is one of those companies. I mean, you heard Niccolo say it, right, Spencer? Jason Raznick says it, the thing behind the thing, right? This is the company that can help other space companies. They're backed by Google. Google's an investor. They got Mark Benioff. They got the support of Mike Bloomberg. They're working with NASA. They're working with FEMA. They're working with SpaceX. I mean, there's a lot to like there. So, obviously a rather bullish take. But, Spencer, if you look at those analyst notes, too, I mean, we're seeing bullish calls from analysts, $15, $17. And as Niccolo said, Goldman Sachs and Morgan Stanley are going to be putting out notes soon too. So
okay, so asking for a friend here, Chris, what is par value on Dmyq? Is it 1050?
Yeah, so net asset value would be between 10 and 1050.
Okay, so we're trading at $1 premium. That's not a lot, frankly. That's nothing.
It's not a lot. And Spencer, I put out a tweet last week. If you look at Niccolo's his past SPAC deals, right? RSI, Genie. I mean, these trade well over the $10 mark post-merger. IonQ, the quantum computing one, rocketed up, right? So, I mean, I've covered SPACs for a while, and I like to bet on, the management team, and there's a lot to like here. So,
here's the biggest thing that I heard, though, and I think this is going to be a change. At some point next year, the SEC is going to step in and say, hey, SPAC sponsors, you cannot say things like this is going to be a 100-bagger, as Niccolo just said. They're allowed to say that right now. That's going to change. I don't think they're going to be allowed to say that because companies that are IPOing can't say that, right? Companies that are merging via SPAC, the SPAC sponsor can basically say whatever they want, right? That's going to change. So Niccolo came out and said, yeah, this is a 10-bagger. No, it's a 100-bagger. That remains to be seen, but it's a very exciting statement to say that. I think the SEC doesn't like that, though.
Yeah, I mean, that's the big difference between IPO and SPAC merger, right? One of the big differences is IPOs can give no forward-looking financial projections. Yep. SPACs, you can project your revenue, your profits, 5 years out, 10 years out. And, that is the big difference. And, as you said, Spencer, SEC may come crashing down on that area. But I would be willing to take a lunch bet that this thing does well over the next couple of years. So
I'm
let me know.
I'm strongly considering just taking 1% of my portfolio and shooting a dart and throwing it at PL or Dmyq. I'm considering it. Let me say that, okay?
That's big because Spencer doesn't buy a lot of stocks. He's an ETF
I mean,
guy,
I bought SoFi. I feel like that's enough SPAC for me. But and I bought the Ackman SPAC. That was a disaster.
Yeah.
But it was a very bullish interview. I'm always trying to play the other side here and think of the other side of the coin. Struggling to find bearish case right now, but I'm gonna keep thinking about it here going forward. If you have any ideas, drop it. If you want to talk me out of it, please do. Please, I welcome it.
Well, I think one bear case you have right now, Spencer, is just that, we talked about this before, that sectors come in favor and then they go out of favor. And I would argue that right now the space sector is very in favor. So if there's any kind of outflow from that over the next, say, year in the short term, then that could hit the stock. But I think any time a company is able to position themselves as sort of that data leader, data provider in a growing industry, is very bullish for the company long term. And we talked about the thing behind the thing. So whether that's being the data provider and leader in sports betting or space, any growing industry like that, definitely makes my ears perk up as an investor.
This is like a long Earth play. Long Earth, right?
Yeah.
If you want to bet against Earth, you could probably short the stock as a way to do that.
I mean, Spencer, you heard him say, so you're heavy in ETFs. One of the big things with ETFs, right, is ESG, right? The rise of ESG ETFs. This is a company that can give ESG profiles for companies.
Sure,
so I think you've got the play there too as well with the growth of ESG. Before I hop off, I want to make sure we highlight that we do have another SPAC interview tomorrow. This is I
didn't even know that. Okay.
You didn't even know that. All right.
No.
Well, finding out for the first time today is Spencer as well. This is a big one. This is another widely followed retail stock right now in the SPAC community. Sports Entertainment Acquisition, SEAH, which is merging with Supergroup, the parent company of Betway. So Betway, of course, has signed several NBA sponsorships with teams. They've got a sponsorship with the NHL. They've got access to several U.S. states. So there's a lot of excitement about this merger. They're going to be a pure play sports betting company, just like a DraftKings. So we're excited for that interview tomorrow, SEAH.
Okay, I did know that. That was one that we had to reschedule. I just didn't realize that it was tomorrow.
Tomorrow.
So, okay,
nice.
We're going to have the chairman and CFO, right? And the
Correct.
CEO. We're going to have the SPAC.
The CEO. Yep.
Yeah,
so the SPAC and the actual company as well. Yep. And the SPAC is actually, the CEO is Eric Grubman, who used to be the number 2 with the NFL. So he knows his sports well. He was essentially second in command at the NFL when he was there.
So he knows where the bodies are buried.
Something like that. He knows where the sports betting growth is. So
sure. All right, we'll go with that.
Yeah.
Chris Catchy is Benzinga's resident SPAC guru. Chris, did we get to all the SPAC headlines for the week? All right, we'll see you tomorrow anyway.
We got to everything I have today. I mean, I got to try to save something for tomorrow, right? But that SEAH interview tomorrow is another big one. So 2 big presentations this week here on Benzinga Live. So if you have not smashed the like already, please smash the like, guys. And if you enjoyed this SPAC segment, let us know in the comments. And stay tuned. Benzinga Live has more coming up, and I will be back tomorrow.
Chris, we'll see you tomorrow, man. See, y'all asked for Chris. We delivered. I told you Chris wasn't going away. I told you. Chris is coming on the show. We're just going to bring him under the umbrella. But yeah, we're not abandoning SPACs. People were saying that we're like Benzinga's abandoning. We're not doing anything of the sort. So I hope you guys like that. We're gonna do that on a regular basis, right? This is obviously a weird week with the holiday and all. And I don't actually think we're gonna do a show Friday, Aaron, unless you want to.
Okay.
But on a normal week, we're thinking like every Monday and Friday. Right, Chris will come on for a good chunk of time and talk through SPACs with us. So that's the way it's gonna be. Just so you know.
Yep. And so we do have Matt Hammond coming on in a few minutes here to talk about some IPOs. But before we get to Matt, Spencer, let's just run through some headlines of the day.
Oh, did you see that zoom?
That was nice.
That was a nice zoom, Rohan. I caught you. That was good.
So, of course, today, Monday, November 22nd, biggest headline of the day so far has been President Joe Biden's renomination or confirming of Jerome Powell as the head of the Fed. See what I did there, head of the Fed. So as we're going into the new year, Jerome Powell is reconfirmed to lead the Fed.
Well, no, he has to be confirmed still.
By the Senate. Yeah, by the Senate next week. So Biden nominated Powell this morning. Next week, the Senate will have hearings on whether or not they confirm Jerome Powell. Of course, the second in the running was essentially Lael Brainard, who was a little bit, she was being touted by some progressives. So either way, Biden in the White House cited Powell's effectiveness in leading the Federal Reserve and the economy through the COVID-19 pandemic. Spencer, we've talked about it before, but the Fed was a lot more willing in 2020 in the COVID-19 pandemic to act with these sweeping fiscal policies compared to the recession in 07 and 08.
Sure.
So of course, those sweeping fiscal policies have led to a little bit of inflation, but have also aided in huge growth in terms of jobs and stuff. So it seems like the Fed is willing to tolerate some bit of inflation as long as that inflation is coupled with strong job growth.
James Santangelo, are you in chat? If you are, let me know, because we both, Gregory just asked, so why is everything tanking? Yeah, Martin's asking it too. I think I can take a victory lap on this. I think I can. My original conjecture at 9 a.m. this morning when the news came out was whatever the news is, whatever the reaction is, if we go up, you fade it, you sell it. If you go down, you buy it. And I was a little bit shaky there. I didn't think I was right. But now that appears to be the case, man. We have given back all those gains, all the gains we made in the market from the announcement. They're gone today. It was a sell the news situation. It just took a little while to play out. I didn't have enough conviction in myself. It turned out, but that appears to have been a good call. And to your point, AB. My interpretation of the pop was that it was the market saying, hey, man, we didn't know what was going to happen, and now we know. And we like knowing things. We don't like not knowing things, right? So it was one less unknown. Market hates unknowns, so that was cool. But like I said, we've given back all those gains now. So
yeah, speaking of giving up those gains, Spencer, can you do me a favor and pull up Tesla's chart? So Tesla this morning was one of the big movers. I don't know if it was related to the Jerome Powell news or not, but Tesla was up about 3 or 4% today at one point.
What happened there?
Something big happened. I was actually, while we were live on that interview, Spencer, looking at some Tesla puts, but I didn't pull the trigger on them because it's like, of course, like Tesla puts, right? We've been down that road before. We know how that ends.
We have.
And so I didn't pull the trigger, but I think the same puts that I was looking at would be up about 70 to 80% right now, and in terms of about 5 to 10 minutes.
Do we know what happened here?
No, I mean for Tesla to drop 2-3% in essentially 10 minutes is pretty crazy. So we'll have to stay on the lookout to see if we have any news of what caused this 2-3% drop, or if it's all technical based. I was also looking at some Netflix puts. I was looking at the Netflix puts because at one point today, Netflix was down while QQQ was up. So that was just showing me that kind of Netflix was showing some relative weakness compared to the overall market and other big tech companies. So those Tesla puts that I played are up nicely. But yeah, Tesla so far has been like the biggest stock of the day for me, just watching it drop 3%.
Chris DePaula just got paid on his Tesla puts. Good for you, Chris. Yeah, that's pretty crazy. Netflix too. I did not realize that.
Yeah, I mean, this is why usually I'm definitely more weighted on the long side when it comes to my trades, but this is where it pays off to be able to kind of play both sides. Here, I'll just pull up my Robinhood real quick to show some of the trades that I opened today. Some live trades with Benzinga on our midday show. You know, we do our live trading every day in the morning, but now I'm taking some live trades right now. So let me pull this up. I opened this Netflix put up about 50%. This Nvidia put up about 20%. A Baba call, Spencer. I'll talk about Baba in a second because we talked about this one a lot. So this is what I'm saying, being able to play both sides. So I said earlier that if I saw Baba break below that 139 level where we had previous support, then I liked it on essentially a short side. But we broke below there and got to a point where you know, I think we can drop a few more dollars here to probably the 132, but I would be surprised. Essentially, I said, like, look, at 135, right? Buyers have to come in for Alibaba. We saw.
Wait, why? What? Why?
Why?
Yeah.
Because it's trading well below essentially the market average in terms of you know, sales. So Alibaba's sales, I think, passed over $1 billion on the year. And it's trading at a 20 PE ratio, so it's just getting cheap, right? It can still drop a few more dollars, but I was looking for that reversal, which it looks like right when we hit the 135 level that we did see some buyers come in. So once we saw that reversal, I hopped in right here at about 135 and bought the puts that expire December 17th. So this isn't like a long dated like call for me. This is just, okay, I think some buyers are going to come in the short term.
Okay. All right. So we got active positions on in Alibaba, and we got a Baba call. We got puts on Netflix. We discussed that. Puts on Nvidia. That was from last week, right?
No, this was one I opened today.
Oh, geez. I thought you had that last week too.
No, I don't think so. Let's go to my history on video. We'll be able to see.
I could have sworn there was an Nvidia last week. We talked about.
I'd probably. Oh, I had a call debit spread last week that I closed.
All right, 20 minutes ago, we got puts on Nvidia.
Yep, 20 minutes ago.
Okay.
So essentially the thought process here, Spencer, was I was looking at the chart. I saw we were getting a little toppy up here at around 11 a.m., 345. Nvidia was up 4.5%. It started trading lower, and I was looking at the chart. And really, because we were at near all-time highs, there was not a lot of support to be caught anywhere. So it looked like as the overall market was turning over, that Nvidia would continue to drop a few dollars, which it has. My put contract actually was in the red for a minute when we had this spike back up where we had some buyers coming in right around noon, probably 10 minutes ago, but then the stock continued to move lower. So right now, up about 25%.
Hey, real fast, can I borrow your laptop charger?
Of course.
Thank you. Appreciate that. All right, and then there was one. We'll go through the last one, which is Celsius?
No, CEI, Camber Energy.
Oh, sorry. I thought that was Celsius.
No, Celsius is CELH. This was one that I actually opened last Friday, I believe, the 18th. Was that last Friday or last Thursday? I don't know, one of the 2 days. And CEI is just one of those kind of meme stocks that's always prone to run. So I was looking at the chart, liked how it was looking, bought some calls. CEI is up like 20% today, and my calls aren't even, I mean, my total return is up 12%. So not great, but I took some off the board. I think I have two contracts left. So yeah, I mean, if CEI continues to run tomorrow, these calls will be up nicely. If not, then I already took some money off the board and we should be good.
All right, I just want to say something as far as Tesla. We asked what's up with Tesla, why is it down? Someone in the chat was like, oh, they had an insider seller. That insider seller is not why Tesla is down. Okay, I'm gonna go to Benzinga Pro for a second. This is from our news feed. Let's zoom in here. Okay, let's zoom in on this. Who was it? It was what's his name? Zachary Kirkhorn. Okay, Zachary Kirkhorn sold 1,000 shares, 1,250 shares. He still owns 53,000 shares. Oh, damn it! Now I clicked on it. There. He still owns 53,000 shares. He sold 1,200 shares out of 55,000 shares. He sold a tiny slice of his stake in Tesla. Okay, that is nothing. It is nothing. It is not like when you say an insider made a large sale, you imply that somebody is like sold half their position, or like he's selling because he knows something. He sold, I don't know what that percentage is, but what's 12? Yeah, let's do the math right now. What's 1,200 divided by? Yeah, we'll do 1,250. We'll get specific.
How many? You said he had 53,000?
1,250 out of, and he had around 55,000.
It's about 2%.
Right. This guy sold 2% of his position. Big deal. 2%. That's so what? It's nothing. That's a nothing burger. Yeah, it's a large dollar amount, but that's what happens when you have 1,000 shares. When you've got 55,000 shares of Tesla, right? We're talking large dollars here, but that is not why Tesla is down today. I'm sorry.
Tesla's not even down today. Right now, it's up over 1%, but it came off its highs. It was up about 4% and came down 3%. I mean, a big move for a stock of that magnitude, moving down 3% in about 10, 15 minutes, whatever it is. But yeah, let us know in the chat what else you guys are watching today. I see Mad Notes is talking about DATS and BAKKT.
Oh, I haven't looked at Bach in a while. Damn it, my computer just. Oh, there we go. Okay. And then we will bring on Matt Hammond imminently. I just want to look at this Bach. What's the damn ticker for Bach? Do we remember?
BAKKT.
No, that's the company name. What's BK? Is it BKKT? Yeah, okay, BKKT.
Oh, sorry, yeah, it's without the A. Down 13% today. Woo wee.
Freaking, that's weird. Anyway. 14% now. Okay. Drop your tickers in and we will take a look as the day's going. Yes, Rockin' Rozzy. We do have a Black Friday promotion. I'll get you the direct link for it, but we've got a Black Friday promotion for everything. So while Matt is going through his IPOs, I will use that time to get you links. I promise you. And Arf says that Zachary sells monthly. So there you go. Who cares? I'll put links in the chat. Don't worry about that. We'll do that during match segment. But Matt Hammond is here with us now. He runs IPO Warriors. Joins us every Monday to run through the previous week, what happened last week in IPO land, what's going to happen this week in IPO land. My assumption was nothing would happen this week because it's a holiday week, but that appears not to be the case.
You know what they say about assuming, Spencer?
I made an ass out of me and Matt.
All right, without further ado.
Yeah, I don't know.
Let's go ahead and bring Matt on the program.
Okay.
Matt, how are you doing?
I'm already being made an ass of, and I'm just, getting the day started.
No, I made an ass. He's saying I made an ass.
Because Spencer wrongly assumed we had no news on the IPO front, and so,
Oh, wait. Is that true? First off, let's correct the record.
Mm-hmm.
Do we have IPO stuff this week? There is news?
There is news. Surprisingly, I was also surprised. So less of an assumption and more of just a logical string of thoughts. But, it is interesting conditions. If I were trying to stealthily bring an IPO into the market with little fanfare or public notice, I would be looking at this week. And we know that the stealth IPO is always lurking in the shadows. And I will be keeping an eye on one specifically that we talked about several months ago that never came live and has now had a little bit of action in its filings. We'll get to that at the end of the show. But last week was a great week for trading IPOs. I mean, we had some phenomenal opportunities and really a great week for just kind of looking at strategy, learning strategy. We had a lot of new followers, several hundred new Twitter followers last week. So it seems like IPO trading is starting to kind of catch on. A lot of people joined the newsletter. If you go to IPOwarriors.com, sign up for the newsletter. And, things are, on one hand, IPOs do kind of become their own bubbles. And we saw a great example of that last week. And I think as we go through some of the examples, there's a lot to learn from what we saw last week. So let me share my screen here and we can go over, what was in the cards from last week, because, weeks like this where, yes, we do have some IPOs, but they're a bit sleepy. I'm not sure any of them are really high conviction. And this is a time to kind of reflect on what happened in the last couple weeks, prepare for the home stretch, which is kind of now through January. I expect that we'll see quite a few IPOs, and sort of sharpening our swords and getting ready to capitalize on some of the trends that we're seeing here is always the name of the game. Did want to check out on the fundraising campaign. We've now raised, so you can see the lighting is a bit better this week. Benzinga has sent out a microphone, a new headset, and a LCD monitor, so I'll be able to see myself a little better while we're filming these. And I want to do some live trading of IPOs. Still raising money. If you go to fundly.com, IPO Warriors /streaming or --streaming -equipment. Getting more lights, just going to get some software equipment and do videos on the IPO previews, and really appreciate everyone who's come out and supported me. I keep my trading money in my trading account. My wife doesn't particularly support me spending money on gear, but through the support of the community, I'm able to upgrade what I have to bring you guys a better product here and to devote more time to the research. So last week, the winning trades were pretty predictable. We called out Sono Group for sure. That was the solar-powered electric vehicle. And if you bought the debut and held it through to the very peak, which happened to be early pre-market on day 2, you stood to take 165% win. That is pretty incredible. And I want to bring up the chart here just to show you something about this one, though. And that is, these are not plays you necessarily want to hold for a long time. This opened up at 2006, and the really kind of smart, safe move is to, it went into, I think, 2 halts, maybe 3 halts here, is to take a part of your position off the table at each halt. And you can say, oh, well, if you sold at 30, you missed the opportunity to sell at 40 at the end of the day, or, up at 50, 45, 50 on day 2. But you don't know that that's going to happen. I mean, this company doesn't even make any cars yet. They're putting, basically, from the prototypes, look like they've reassembled the door and roof panels on on a BMW. At least that's what a lot of the rumors were from a few years ago. This thing started as a Kickstarter campaign, and it's already back down below the debut price. So when you see these kinds of opportunities and you're playing a momentum trade, don't fall in love with the idea. I mean, I'd say take profits as quickly as you can. I, finally felt like last week I got over sort of the yips I had from misplaying an IPO a few weeks ago. And just, my dad was in the hospital. He's stabilized. So I was finally I think a little bit more clear-headed, but I still short-armed this one a little bit. I'm not going to regret taking profits ever. And the reason is you don't want to get in a habit of getting to here and say, oh, Rivian, went from 100 to 172. So, this is just day 1. This is going to 100 easily. Rivian's pulled all the way back to 110 today or something. These things, what's hot right now in the market one day is forgotten about the next day. So if you took profits on the way up, good for you. If you hold out a piece of your position into the end of the day, that's great too. But once it dips below VWAP here, this really can go either way. And we're going to see another one in a minute here that went the other way. And this part is predictable to me. The hype was there. The buzzwords were there. It's only 10 million share float. I mean, look, already the float has ballooned from 10 million shares. There was some lockup and warrants or something here that we didn't catch in the S1 that is now 65 million shares. So there's been a massive dilution since the 10 million shares on day 1 to 3 days later, 3 sessions later, 65 million shares. And if you sell on the way up, you're inevitably going to be giving up the upward direction that follows. But you don't know how much upward direction there is. And the way down is so much harder to sell. It's so much harder for me to have seen a stock hit, say 30, and then it comes back to 25, and me just wanting it to go back to 30 or higher to placate my ego, or, I'm still up, but it just feels better to me when I sell on the way up. I go, okay, well, I spent 20 minutes on this trade and I made 30% on a pretty big position. I can go enjoy the rest of my day, spend some time with my kids, go get some exercise in the gym. That feels really good to me. Whereas once you kind of have that, oh, I should have sold it higher, you start holding on. When you start holding on, you just kind of, it's like sand slipping through your fingertips, as you try to like grab that, grab it tighter and tighter, and it just bleeds out. And then, you end up selling for no profit. And the worst is, my worst loss ever is still getting psychologically mind fudged on Bumble. And just wouldn't let it go. I should have sold on the way up, and that's why up on I got a piece of paper over here, is take profits without regret. That's rule number 1. Rule number 2, don't chase. So the next one I want to look at is, that was SEV, multiple halts. You take out 30% on the first halt, 30% on the second halt. If you want to let the rest ride for the end of the day run, great. Otherwise, just take your money out here and be happy with a huge win, in 30, 40 minutes of trading. BRZE, I'm going to skip this one. It was just a tech company. Debut was super high, gave you a little opportunity to make money, no downside really. But again, after day one, you want to get out of this. Take your money early on these. These are not, people say, oh, don't buy the IPO. You don't buy the IPO if you are in for a long-term hold. That's generally the rule. But there are plenty of opportunities to make profits on the hot ones where demand shows up. Sweet Garden, this is a great example of one that was so hot. Like, the IPO priced at 23 to 25, or the range was 23 to 25, and then it priced at 28. That is indicative of very strong demand. Allocations were fairly thin. We have seen IPOs get more allocations to retail traders. But this was one where it's kind of like the third of, the regional chain food and beverage IPOs. We had Dutch Brothers kind of caught everybody off guard. Portillo's, that one was sort of like, oh, wait, we should have seen this. Dutch Brothers did crazy. And then Sweet Green, the debut price was up at, the pre-debut indication price was started at like in the 30s, and it was like, oh, great, this one's going to be hot. Everybody in, Twitter had, flames and rocket ships and all this stuff being posted. Then it went up to 40, and you're kind of like, well, it just must be really high demand, really strong. Everybody wants this. And then they started showing debut prices of 51, and then it got as high as like 55, 56. It was just like, I don't think that this goes much higher from here. I sort of mentally given myself the day off. I was just realizing and, talking to my wife about it. She doesn't know much about stocks, but she knows me. And she said, Matt, you need to just take a day off. Take a day off, don't play this. And I still almost pulled myself into this one. But once I saw debuts up at, 100%, there's not a lot of room after that. And when something's like, everybody wants to get in on it, IPOs can get played out before they go live. We saw this with Coinbase. We saw this with even Rivian on the day one. We saw this with Snowflake. We saw this with Rivian. On day one, they open up and they go up a little bit for a while, for a few minutes. I think they're, generally I can see about 10 or 20 minutes of upward move and then sell off. And that is because these things still are up relative to the IPO price. So Sweet Garden, once it hit 56, you're talking 100% of the IPO price. It's up 100%. So anybody who has the IPO that can sell is probably looking at that and going, okay, I'm done. I'll, take prior. I was already just waiting to see if it went up. Now I'll sell. And it was such a technical trade. If you did want to play this, you wanted to get in on the debut, which would have been 51.70 or 51.77. I forget exactly what it was. And then you've got to, once it does move up, which you're expecting because there's so much demand and not everybody knows to buy in with a limit order before the debut, you want to set your stop loss at like 52 and then inch it up a little bit as this breaks up into 53, 54. But this would have been such a hard trade to, to just say, okay, well, I'm going to set my limit order at like 55 or 54.95 or something. And to take, a few dollars on a potential downside that could be anywhere between the IPO price and the debut price. That to me is a high risk trade. just too hot to handle, kind of overblown before it ever debuted. And this is why, I have gotten better at I'll get really pumped up for big IPO. I was really pumped up for this one. I thought, for sure, if this opens in the mid 30s, this is running up to like 45 or 50. There's going to be a really good opportunity. I mean, SEV just gave a great opportunity the day before. It looked like this was going to be the next one, but everybody piled into this one. And you just have to kind of learn to accept that not every great IPO is going to be great for the retail buyer buying the debut. Some are going to be really good for the IPO traders and not leave much left on the table. So the next big one was on Friday, and this one was pretty easy to spot. I was able to kind of regroup the day before, get my mind together, and take a really big win on this one into the weekend. And this was Snow Lake Resources, lithium. Lithium is basically the oil for EVs. So everybody's pretty hot on lithium.
I don't even remember this. I don't even remember this.
This got added and went out in the newsletter, but it didn't go out. I don't think we reviewed it on the show.
Wait, what day was this?
This was Friday. And Friday is always a bit of a wild card. And one of the things that I want to point out here is that, first let's just say what it did. Lithium priced at $750. And at first I was like, okay, well, lithium should be hot. Everything EV is on fire right now. This isn't a lithium miner. They haven't even started mining operations. They are going to be up in Canada. Apparently the Canadian government is ultra supportive of this. They're doing a full electric powered mine. So there's a eco sustainability angle to it. And what I was looking for was, are people talking about this on social media? I go to Twitter, I'm going to Reddit, I'm looking up Google Trends, I'm seeing if people are searching and looking for this stuff. And the buzz was pretty strong on this. And when I see a debut that starts indicating at 15, so we saw the indication prices around 15, and then they brought it down, which I like to see. They did the same thing with SEV. They indicated first at 30, and then they brought it down to 20, went live at 20:06. This one went live at 11:50. And, I was able to take a pretty big position and just sit back and wait for it to halt up. It took about 1 minute. Halted up. I took half my position out here, the rest up here with the limit order. And I missed out on what could have been bigger gains, but I also made almost 10 grand in, half an hour of trading. And Friday off early, go spend time with family.
Good trade,
feel good
man.
about going into the weekends.
Yeah, good trade.
And the thing I really want to show you here is why I don't like to be greedy, and why I tend not to double dip on these types of plays. So this is SEV versus lithium, arguably very similar setups. Relatively low floats, a lot of social media buzz, EV power related, and they both had similar indications. So when I say indication, we can see on the Webull app, we can see the price that the stock is going to go live at before it actually starts trading on the day of the IPO. And there's a balancing process where they're pairing up the seller's shares. People who are saying, I just want to sell when it goes live. I'm willing to take whatever premium I can get right here. And then the buyers, which are people like me and other IPO buyers or traders who are saying, look, I couldn't buy the IPO shares, but I'm going to buy this the second that it opens for debut by placing a limit order above whatever this indication price is. Now, this indication price fluctuates quite a bit until they've paired up all the shares. And with SEV, we saw it start at around 30. They kind of tested the pricing around 30. Then they brought it steadily down to about 20. And that to me shows demand, significantly above the IPO price. But they gave it some room. I mean, there was demand up at 30, but they couldn't pair all the shares. So they brought it down a little bit until they could pair up all the shares. We saw the same thing with Snow Lake. They indicated up at 15. Then brought it down to about 11. I really like seeing that, and I'll often take that first indication price as sort of my target exits. And we saw that actually in both of these. This one topped out at about just over 30 on the initial run. This one topped out at about 15 on the initial run. So we saw both of them do this first move up. Lithium actually had kind of the second leg right away, but they both did this pullback below VWAP. Now, this VWAP is really a great indicator for IPO trades. That's the volume-weighted average price. It's the average price at which shares have been traded during the day. And day traders, a lot of day traders, this is kind of like the North Star or the compass by which you are going to trade against.
Yes, it is.
The theory being that, well, once it's above the average price, people start to sell. And people, once it's below the average price, people see that as a buying opportunity. So when these make that dip below VWAP, a lot of people say, okay, well, that's why I'm going to take another play on this. And I want to show you why that's pretty dangerous, and especially the difference between, because we see this a lot, midweek IPOs tend to have more follow through. They have more follow through into the end of the day, and they have more a better chance, from my experience, of having a day two run off the media cycle. That being probably because people have short attention spans, and over the course of a weekend,
damn straight,
and, going into holiday week of all things, the Friday fallout was intense on this one. It went from a high of 18 down to close at 12, and I think now it's down to like 950 or something. So these trades get forgotten about very quickly. I highly advise recognizing, am I in something like Rivian where they're going to be talking about it for days, or am I in something like SEV, which is a little bit of a gimmick play that gets hot one day, and then people are kind of like, okay, what's the next thing? I mean, we're in an era right now where, look at Wajo from yesterday. Was it yesterday or Friday?
A couple days ago. Yeah.
Also Friday. I had the Voso on my radar. I missed my entry the day before by literally like 5 cents, getting too fancy with trying to save a little bit of money with the limit order. And the next day it runs to 19, and then Friday, and then today it's back down to $9 again. So we're not seeing a lot of consistency. It's kind of like soup of the day, flavor of the day, trade of the day, and then on to the next one. So if you are trading these stocks, especially the IPOs, on down days, recent IPOs get hit pretty hard. On up days, the low phones especially, or any kind of headline, they'll fly. But especially IPO trades, one of the things I love about them is when they go well, you're making your money really quickly, and you can pretty much take the rest of the day off. So that's what I wanted to cover for last week. This week I wanted to cover just a couple IPOs.
Wow.
And it looks like there's more. There are 5 IPOs.
They're all on a Wednesday. That's interesting.
They're all on Wednesday because Thursday is a holiday and Friday is like a half day. So if anything shows up Friday, I will. And it has anything
before a holiday.
For example, China, I will sell almost every bag that I'm holding and put a ton of money into it because we'll get to the stealth IPO play here in a little bit. Here, I'll save that for the end. So Singulate, this is improved drug delivery technology for ADHD treatments that are already improved. And this was rescheduled. This has been rescheduled a couple times. I don't know anything about this underwriter, Landenberg Thalmann. There have been a lot of lesser known characters in the underwriter, in the underwriter slot on these low float IPOs. There are some that have a reputation for delivering kind of ridiculous runs. Those are specifically Network One Financial and Bosted Securities. So anything they do, I'm definitely like on high watch. But now Maxim Group is on that list after delivering SOPA and a few other low float IPOs that really ran. So the underwriter matters, and I don't know this underwriter. It's interesting, but I've pretty much resigned myself to a rule of not playing biotech anymore. They're so hard to get excited about. The buzz has to be COVID. or maybe psychedelics, something, I don't know. It has to be something that's really buzzy for these to work out. Otherwise, you end up getting stuck in a bag with absolutely no catalysts for a long time. They're not going to get a day 2 media hype. They're not going to get earnings boosts. They're not going to get a big run on the expiration of the silent period. The only catalyst is, FDA approval or orphan status, some kind of FDA news, and that's
next.
A lot
Pass.
to sit around. Austin Gold also rescheduled from last week. Gold exploration in Nevada, corporate offices in Vancouver, BC. Someone pointed out to me that the original penny stock pump and dumps were always the gold, the gold mining stocks.
That's true. That's true.
These guys are pre-revenue. Their website is laughably terrible, which to me it does matter. I mean, I've seen more bad IPOs have crappy websites than good ones. A company who's really a company cares about their marketing, cares about their image. The ones that are just going public to cash out their stock or pump and dump their, the shares they've been holding on to, they're not going to put a lot into their website. Having said that, the CEO of this company did just sell, like a week or two ago, his previous company, which was also a gold mining firm, for $2.8 billion. So, and it was at a premium to something like a 30% premium to the current share price. So, I don't know. Roth Capital is the underwriter. People tend not to like Roth. I don't know what they did in their past, but it seems like they screwed some people. And I've stayed out of their IPOs because every one that I've watched has either not done well because people don't pile in, or taken a long time before people are like, oh, okay, fine, maybe this company is actually doing something. But I don't get a lot of, there's not a lot of buzz for gold. I think people are going to kind of already have one foot out the door on Wednesday and looking for a reason not to trade anything. So I'm not particularly bullish on anything, just because retail demand has to be pretty intense to drive anything up. I'm kind of going to skip through these 2 uplistings. I couldn't get a lot of information on them. Skylight Health Corp, specialty provider of affordable healthcare. It's uplisting from the TSX. Couldn't even get nailed down the share count because I was that disinterested in hunting it down, and didn't just pop up in my easy Google searches. It's not the kind of play I'd be very interested in anyway. And uplistings, unless they have a kind of a sneaky underwriter, or they are in a space that is particularly intriguing, Bitcoin, when Bitcoin's soaring, something like that, I don't like them that much. We had a good example last week, AHI, which was an Australian uplisting. They do like body image scanning, and it was not only confusing in terms of, they said, the float is 1 million shares, but it was actually 1 million units, and each unit had 2 shares and a warrant, and there was another 98% of stock which could be sold at any time at the underwriter's discretion. It was just kind of like, no thanks. And it did not do well. It debuted at like 5 something and dropped. I think it's at $3 now or something. So I don't really like those uplistings too much unless they are underwritten by like Bosted Securities for some obscure Chinese company. Okay, Sangoma Technologies actually sounds like a fairly... No, I'm not going to say that. This one's boring. It's communications as a service. It sounds a lot like some of the other ones that have not done well. It's an uplisting. Yeah, blah, blah, blah. Okay, this one's sort of interesting. If you said, Matt, you have to play an IPO this week, what's it going to be? I'd say, okay, well, this one. Aeroclean Technologies, it's 2.5 million shares. They have a patented technology that basically cleans the air, like their air purifiers focus on antiviral. So you say, okay, well, hospitals and waiting rooms, pretty much everybody would like to feel safer in their space, given COVID and now the flu season. So, these guys have patented technology. It fits the COVID buzzword, and there's nothing else to trade on Wednesday. The float is 2.5 million shares. If Twitter's buzzing about this and Reddit heads are talking about it, I don't know. Like I said, if I had to trade... This
wasn't the stealth one, right? That's next?
Yeah.
Okay.
1 second. Okay. we actually have kind of two stealth things to talk about. First one is the one that I meant to talk about, and this is GSUN. This is one that we talked about last June, and it's a Chinese education company. And who in their right mind would invest in a Chinese education company?
Come on now.
What, you don't want to go all in on this, Spencer?
Come on now. You got to give me something better than this.
Okay.
Chinese education. Tell me why I shouldn't run for the hills.
You should run to your bank account, grab a bunch of cash, fund everything into your trading account.
What?
This is not financial advice. This is just what I'm probably going to do.
Why?
Because I've made a fortune on stealth IPOs. And this looks like a duck, talks like a duck, walks like a duck, shits like a duck. This is like, we called this out 6 months ago. This is Network One Financial. They are the ones that, along with Bosted, were in on UTME. They were in on eBet, I think it was. They were in on CPOP. I mean, they've been a part of a whole bunch of these. And anytime that we get these kind of 5 million share floats, ties to China, I mean, why would a Chinese education company want to go public now?
That's what I'm asking.
Because rich Chinese people are panicking to get their money out of China right now. And these IPOs are the perfect cover.
No, you're right.
This.
That makes total sense. That makes total sense. So why would anybody else want to buy this, though?
Okay, because this is likely to do what SOPA did 2 weeks ago. It's going to do one of two things, in my opinion. It is either going to... Okay, so the IPO is going to price at about $5. Let's just say $5. The debut is what I'll be watching. If we get a debut that's somewhere in the neighborhood of, say, $9 to $17, then we know something's up. That's confirmation to me that, hey, this is going to be run up to $20, $30 on the initial spike, 40 to 50 by the at the end of day run, and likely a day two run up to like 60 or 70. Go back and look at the chart of SOPA and CPOP and compare the two. Throw UTME in there. There were others, but they all followed the same routine. The other scenario that we see is that it does something like JZXN, or I forget the other one, SN. I forget what the other one was. There was another one, SNDG. I forget what it was, but there was another one where they just ripped the debut price up to like 45. Now, if we see this debut at 45, I'm not going to play that game because they've already there's no chairs left at that point. They've already played the music and, you're walking in after the party. And those just come straight through.
I'm going to be watching this one. I'm going to be watching this one.
We don't know. The reason that I've put it back on watch is I have my alerts set up and I got an alert that they have amended the F1 filing with the SEC on November 16th. So that tells me that they are getting this one ready. And one of the hallmarks of the stealth IPO is that they don't really promote it. They don't really want us crashing their party. They want to move shares with nobody else involved because what they're really doing is moving money. It is my opinion. They're really moving money out of China to Hong Kong or Singapore or America. And the less people that know about it, the greater the chances that it runs. So if they don't announce, so if they announce it, well, I wasn't wrong. I said the same thing. SOPA, that SOPA was going to be, was a crappy e-commerce company, but smelled a lot like a stealth. And what did that one do? Went from like 16 to the next day was at 70. So just
all right.
Shake your head.
I'm going to have my eyes on this one, Matt. Well, we got to wrap it up there. All right, Matt Hammond. One more. Come on, man. I thought that was it.
It was, and then something else came up. So I gave you guys pets when it was at $1.20 about on September 30th, and then it ran up to about $8. It's about $5.25 right now. So there's another Chinese random company that has pulled a similar move, and that is PLIN. And
what?
Yeah. So let me
pull up a chart here. Hold on a second.
I got a chart here too.
PLIN. This is okay. What? It's $1. What is this? Yeah. Okay. You got it too.
Okay. So here we go. So they have just done another direct offering below the current price, and the stock went down initially, and then they ran it up. So my theory is, we know for a fact that Chinese wealthy are panicking, and they are trying to figure out ways to get money out of China. And one of the ways that they can do that is by putting stock in the hands of someone they know outside of the country, taking a bunch of their cash in China and buying that stock from the person that they just gave it to. That effectively moves the stock from their account to whoever's selling it. And the easiest way to do that is through an IPO or a direct listing or an uplisting. We saw this with FCUV. We saw this with pets. And we saw this with, and I think we're seeing it with this one. So these are totally speculative, entirely based on the assumption that Chinese wealthy are panicking and trying to get their money out, which we believe to be true. I mean, there's articles being written on it in China Daily, which I subscribe to, and this is a way for them to facilitate that. So I took a little play here. I'm not going to go hog wild on this, but I got in here at 140, and we'll see what it does. But if you're looking for something, I mean, what are you going to, everything else is down. I guess you could go dip buying today, but I like these plays. So, these have worked out well for me.
All right, Matt Hammond from IPO Warriors. Matt, thanks a lot, man. Have a good rest of your week. Happy Thanksgiving, sir.
Happy Thanksgiving, guys. Good luck with your week too.
All right. Hey, AB. We don't have our next guest on for a couple minutes here, but we got a lot more things to get to in this short window. Did you see the viral video of the weekend?
The Steph Curry one?
Yeah.
Yeah, I did.
Yeah?
Yeah.
Does anyone in chat, you all know what I'm talking about?
Let's go ahead and play it for...
let me bring it up on the screen here. Did you all see this? I woke up to like a 50 freaking alerts on Saturday morning. Boom. So what happened was the Golden State Warriors were in town on Friday night, right? And here's a video that they tweeted. Oh, look! Someone's wearing a Benzinga t-shirt. Look at that.
I spy a J-Raz.
Oh, wait. So we're playing rock, paper, scissors. That's Steph Curry. Basketball savant. Greatest three-point shooter ever. Oh, look. There's Jason Raznick behind him. Because that's his son.
Wait, pause it right there.
Yeah.
This was my favorite untalked about part of the video. That gentleman behind Raz in the tan hoodie.
That guy, the St. Louis Cardinals?
Wearing a St. Louis Cardinals hat.
Okay.
So I got to find him, see maybe he's from St. Louis, maybe he's just a big Cardinals fan. But either way, it's kind of...
Wait, so let's back it up. So here we see the sign, right? And the sign comes into play later because the sign said, rock, paper, scissors. Here, rock, paper, scissors for a pair of shoes. If I win, I get your shoes, and if you win, you get my shoes. Look at that. You can't pay for that kind of advertising. Well done, Jason. This video has 767,000 views on Twitter. See it right there. Well done, Jason.
Yeah,
I just realized that my sound is off, so you couldn't hear it. But
Jason's a genius, not only for facilitating. Well, Josh facilitated it, but to have Josh in the Benzinga shirt while courtside was just a great touch
because kids are cute.
Well, yeah, and if we got this video, but Josh is wearing like a Pistons jersey, it doesn't have the same marketing effect for Benzinga. So,
like I said, I woke up to notifications. Someone was like, "Whose kid is like at Spencer at Joel?" Like, Jay, whose kid is this?
Well, people asking that obviously did not notice Jason
sitting
in the background filming the whole thing. But yeah, that's an awesome moment for Josh. Josh just had an eventful year. Josh, we got to meet Phil Mickelson at the Rocket Mortgage Classic. I know he played rock, paper, scissors with the Pistons' Killian Hayes.
What?
Yeah, so I mean...
Wait, Chris is asking the important question, but did Steph give up his shoes? Oh, no, Steph won.
No,
so did Steph get Josh's shoes?
No, I don't know if Josh offered and Steph politely declined, or if Josh just didn't offer his shoes and they just overlooked it. But honestly, it was good for Steph to be a man of his word and not give the shoes out just because, but Maybe he should have taken Josh's shoes. Maybe that'd be a fun story.
So if that was going to happen, did Jason and Josh bring an extra pair of shoes? Is my question. Do you think, or no?
No,
they probably didn't do that.
No,
let's be honest. But yeah, that was pretty cool. I mean, Benzinga sort of went viral in a weird way because that clip was everywhere on Friday night / Saturday morning. I literally was out to breakfast on Saturday morning, and on the TV in the diner, like, they showed the clip, and literally my fiance was like, "Wait a minute, isn't that Jason?" And I turned around, and it was freaking Jason on TV. Anyway, it was just a weird clip. Anyway, I thought that was fun. Wanted to show that. If you hadn't seen that already, Josh Rasnick going viral over the weekend. What else was on the list to discuss here? Because there are some few questions from the chat that I want to get to. Do you have anything else that's on your radar here, AB?
Yeah, let me check. So I know we had we haven't talked about all the earnings plays this week.
We haven't.
We're of course coming out of earnings season, but we still have a few more this week.
Yeah.
Primarily on the retail front. Well, of course we have Zoom today after hours.
Yeah. Good point.
So we have Zoom today after hours. I know we have Burlington, I believe tomorrow pre-market. We have Gap. We have Nordstrom's. We have
all right, here's a Zoom chart. We should probably start there, right? Because gosh, Zoom has just been brutalized. If you're long Zoom, I am sorry. It's tough. It's a tough year. We pay for Zoom at Benzinga. We use it. We've been using Zoom for, I don't know, 3 years, 4 years. It's tough. You've got to figure there's some kind of support right here, Aaron, right here at 242.
Yeah, and I don't know. Like, I might look at some YOLO calls on Zoom for a potential great earnings. I think between
no, don't do that, man.
Well, hear me out, right? So we have, as we move toward going back into office, I think we're going to see more and more kind of hybrid workplaces as opposed to fully in office or fully remote. So of course in the hybrid workplace, Zoom will still be a major player, and who knows, maybe the company says something in their guidance saying, oh hey, look out with this rising COVID across certain states, across certain parts of the country, that Zoom could get another pop. I don't know. I mean, the chart's just been so beaten down. We're looking at weeklies right here.
Yeah, I don't know what I don't know what they can say. Maybe they say like the Metaverse. I have no idea. What can they say that will make people be like, whoa, I should go out and buy Zoom? I don't know.
Well, I think
it's a great product. We use Zoom. Zoom is awesome. We use Zoom. Zoom is not, Shelly said Google Hangouts is better than Zoom. No, it's not. Zoom is amazing, right? As a product and a service. But just the stock, what can they say?
I think that's it. I think that part of the reason Zoom has become so out of favor is because we've kind of reopened and started going back to office a lot quicker than people initially thought. But part of that, I think, will be this integration of a hybrid workplace that's here to stay, right? Like, I don't think that's going anywhere. And part of that hybrid workplace will be Zoom or Google Meets or whatever it is. Eduardo's saying that on my offices, people still working from home, but we don't use Zoom. They use Microsoft Teams. I don't know. I mean, we use Google Meets and Zoom here, Spencer, but kind of like interchangeably. I don't really have a strong preference, one or the other.
All right, I'm going to do a survey in the chat right now. Is the all-time high in? Will Zoom ever make a new all-time high ever again? That's the question. Will ZM ever make a new all-time high? Yes for yes, no for no. Survey in chat. The all-time high on Zoom is what? 600 something?
It got that high. Wow.
What's the all-time high? No, it didn't. 588. 588 is what Zoom got to. We're down. Yeah, I mean, it's been just an absolutely terrible year.
Well, then, Spencer, I implore you to, put your money where your mouth is. Put on a trade for Zoom and into the earnings.
Should I? into the earnings, man. That you're putting me on the spot now.
Yeah, I mean, you can take some risk off. I mean, we can do.
All right, okay. Should I go and like sell some calls or something, or buy? I mean, should I buy some puts?
You're bearish into earnings. So what we could do if you wanted to, because contracts do get a little pricey for Zoom. If you wanted to, not put as much risk out there, what you could do is you could do like a put debit spread. Well, here, let me share my.
Okay, share your screen. Walk me through this trade here that we haven't thought it through yet.
So say you think,
yeah,
Zoom's gonna drop 5%, right? That would be about $12. So it would bring us down to, right at 230, right? So what we could do is we can go to the options. We'll do the ones that expire this Friday because we don't need a lot of.
Wait. Why not just go to? All right, fine, whatever. This Friday.
Because we're only playing the move tonight.
Okay.
Into the open,
fine,
we're not playing
fine,
a long move.
Okay. Wait, does this mean I'm gonna have to like do something on Friday?
No.
Okay.
No.
Okay, because I don't want to have to do anything.
So if we do this put debit spread, it would cost us $185 to put out the trade, $185.
Yeah.
And we can see from this chart right here. So if Zoom is above 233.20, 233.20,
I'm good.
Then, well, if it's at 233.20, then you're exactly break even. Anything,
No, it's above it, I'm bad. If it's below it, I'm good.
Exactly. Above it, we lose out. Essentially, we lose out on that 180 that we paid for the trade. If it's below it, if it's below 230, so anywhere below 230, we max out our profit at 325. So you're putting out 180 to potentially profit 325. That's if we get more than a 5% drop tomorrow into earnings, or after the earnings, I should say. So if it's in between that, our strike prices, in between the 230 and 233, then you will still make money, just not as much as that max profit of 305.
This doesn't look that bad to me. I gotta say, like I may just do that because not on Robinhood because I don't have a Robinhood account, but I hop into my Fidelity account or my YOLO Weeble account, and yeah, this I think you may have talked me into this. It is expensive. But,
I mean, you're paying 180 to.
I'm sorry. What was the 233? Was the break even? We're $8 away. That's not a lot.
Wait, have we moved since I started looking at them? Yeah, now it's 190. But yeah, I mean, I was kind of on the other side, Spencer. Like, I would not be surprised if we see some strong guidance come out of Zoom and kind of pop. I mean, let's look at the chart. It's so out of favor right here that who knows?
Wait, there was a chart that I want to bring up this chart. I got it. I saw it this morning. It was from Wedbush. And it'll take me a second to find it.
This was so funny. So looking at the Zoom chart on a longer term horizon, Spencer, we can go back to kind of March 2020 on the onset of the pandemic.
Yeah.
Zoom was trading at about $105, went all the way to $250. So, right, you're already up 100% if you bought in right at the onset of the pandemic. And a lot of people were probably like, okay, like that's a huge move for Zoom. And then it goes from 250 all the way up to 560. So if you thought you missed out in July, the first summer of COVID, then, I think that's what I thought. Like, oh my God, this has already gone up 150%, whatever. And then it went up another 100%. And of course, since then it's coming back down. But yeah, like you pointed out earlier, we are sitting right now at kind of previous support.
Okay, so I can't bring up this chart, but I want to show you. These are some stocks and their year-to-date performances. You ready?
Yeah, pull up your screen.
I can't because it's not like a tab. It's like a separate window, and I can't like toggle between. Right? It's weird, but whatever. Okay, so PayPal year-to-date down, and this is going into today, obviously. So not as of right this second. Down 37%. Twitter, down 37%. Snapchat, down 38%. Chewy, down 38%. Lyft, down 39%. Palantir, down 45%. DraftKings, down 49%. Pinterest, down 49%. Roku, down 51%. Bumble down 53%. Baidu down 55%. So is Alibaba. So is Zoom. Robinhood down 58%. Teladoc down 60%. Penn 61%. Beyond Meat 67%. Space 71%. Lemonade 71%. Peloton 71%. Zillow 71%. Stitch Fix 73%. Chegg 76%. Smile Direct Club 81%. I mean, it's painful. This is the exact opposite. All of those stocks were like the golden children last year. And now they're just getting hammered. It just goes to show that you got to be able to be flexible, right? And last year, it was all about growth. It was all about Kathy. And the people that are like me, that didn't have a ton. Like I have some growth. I've got a Kathy fund, but not a lot, right? People like me were lagging, right? I definitely did not have as good a year last year as a lot of other people because I didn't have, half my portfolio in Zoom or Roku or any of these stocks, right? But I'm having a lot better of a year this year as those same people because I'm diversified, right? And now I've got some stocks that I've had tough years, right? SoFi, I've got a Kathy fund. It's not had a great year. I've got some cannabis, not had great years. But because I'm so diversified, I've had a much better year than those people that like just chased all these growth stocks and are paying for it now. So the market moves in cycles. You would do well to remember that. And this is a big lesson, I think, in rotation, right? It was a great year for growth last year. It was a terrible year for growth this year.
Well, I mean, I think it depends on which growth stocks you're looking at, but yeah, overall, if you're looking at like ARKK as a proxy for growth, but I think there are a lot of, like, I would argue like Nvidia's still a growth stock, had a monster year, right? So there are some growth names that are still doing well, but yeah, I mean, it's interesting you list off all those stocks that are down 50% plus this year, and then you look at the overall market.
It's wild.
Wow. So, and I'm sure, again, same concept. You look at those stocks, the ones that you mentioned compared to the market last year, all outperformed the market. So I guess, yeah, I mean, I think that's a good lesson. Like anytime you have stocks that are outperforming the market for so long and by so much that eventually they will have to revert back to the mean.
Yeah.
But I mean, we're all looking for those names that will be the next.
Everybody wants the next Tesla, right? That's why we all chase Rivian. Everybody wants the next Tesla.
Yeah, I mean, everyone wants the next Tesla. Everyone wants the next GameStop. Everyone wants the next AMC. But yeah, I mean, like, if we look at them on a stock-by-stock basis, like Peloton, like that move makes sense, right? Everyone was going to need to work out at home. Everyone was going to, gyms were closed across the country. Like it made sense that Peloton ran up so much, and then at some point, like it gets overextended. And, once it's out of favor, it's out of favor.
Yeah. I mean, Shelly's looking for a Black Friday sale in these stocks. They're on sale. Go buy them.
I'm not buying Peloton, not at any price.
You're buying Alibaba.
I am. Well, I bought calls on Alibaba. Yeah. It's just such a the company makes so much money. It's such a big company. I get the risks. I get the potential for more regulation in China.
Didn't they just lower their guidance? I'm pretty sure they just lowered their guidance. I'm like 90% sure they just lowered their guidance.
I know the company, or I know analysts came out and lowered some price targets after the guidance, but I don't. I mean, look in this week alone, Baba's down almost 19%.
Yeah,
buyers got to come in. That's all I'm gonna say.
Buyers got to come in.
You got to come in.
You know who else has got to come in? Jake Wujastyk from TrendSpider. He's got to come on every Monday at 1:00. He's here right now. Let's bring him on the show. Jake, what's up, man?
What's up? That was a smooth transition.
Oh man, is he really quiet for you?
He is just but me? Yeah.
You're really quiet.
Might have the wrong mic set in.
How about now?
Yeah, that's much better.
Yeah, sorry.
Yeah, smooth transitions is what I do.
Smooth transitions. Yeah, no, I heard you guys talking about the market. Very the only word I can use is bifurcated, right? You got pretty much two markets here. You've got one that's very very heavy on the sell-off side of things, growth names, and then you do have your Apples of the world that are, somehow kind of keeping the market up. But it's, it's that time of the year where if you are in a name that hasn't done great, tax loss selling is likely coming into play in the next, rest of the year at this point. So something to consider. It's all about what are the participants in a name doing rather than how good does the S&P 500 look, because those are two very different looks right now.
That's exactly right. Everyone is seeing the same thing because they're seeing the indexes at all-time highs, and they're seeing but my Teladoc, my ARC. I hear them. I'm in a bunch of stocks that have gotten. I'm in like 4 cannabis stocks. It's been a brutal year, right?
Yeah. It's the whole market just is a little weird, and you want to see. If you've got a watch list of 100 stocks, you don't want to see some stocks that are really big up 2%, and then the other stocks that don't really represent the market down 10% in a day. It's just, that's not a healthy market. So, can you see my screen? Yeah. So, the S&P 500 chart still looks actually pretty decent. You've got this big move that we had this morning, and then we're kind of pulling back to this ascending triangle resistance here that I've created using more trend zones rather than trend lines. You've got the volume shelf here. From a risk reward standpoint, SPY in itself looks pretty good, and historically this is a pretty strong week for the S&P 500. And a lot of time you just get kind of a low volume melt up this week because you've got Thanksgiving, you've got the market closed on Thursday, you've got the market closing early on Friday. So a lot of people have kind of called it for the week probably before it's even started. So you're going to probably see that the rest of the week. And for me, it was a pretty good month for me. I am not going to even take any chances trying to hold on to plays that aren't working out. So I decided to go pretty heavy cash after a pretty strong move in First Solar today. That was my big win for the week, and took some losses on some of the cannabis names because they're just not ready yet, and they could hit new lows before they start reversing. And no point in staying wrong. You got to know when you're wrong and take the loss. So SPY looking decent. The only thing that I would mention here on the monthly chart that I did find this weekend, or I guess late last week, you can see that the S&P 500 is getting pretty close to this longer-term level of resistance, pretty much dating back about 11 years at this point. So we are starting to grind up into this kind of like, something's going to happen zone. But at the same time, if you look at what happened back in 2011, 2012, when we had that sell-off, we continued to grind up through this area for a year and a half or more. So just because we're getting in this red zone doesn't mean, this thing's going to just absolutely tank. It just means that this is an area where the market has kind of maybe slowly grinded up rather than having some of these sharp moves like we're used to over the last year and a half.
What price is that upper band?
Right around 490.
Okay.
Assuming that if we went, and remember the diagonals are always a function of time. So like if we were to go straight up this month, resistance is around, let's say 480, 850. But if we did something like this where we essentially just kind of went like this, that would put price action in the 540s. So it's, diagonals are always tough because they're not an exact price level. They're always changing as time continues to move. And so 480s to 490s is definitely the top of that area, and we'll just have to let price action do its thing and go from there.
Let it do its thing. Nothing wrong with grinding higher, and nothing wrong with not making a new high every single day. By the way, guys, this is going to end up being, when all is said and done, in all likelihood, a record year in terms of number of new all-time highs for the S&P 500. I think we made our 66th new high or something like that on Friday. Wow. We're somewhere in the ballpark of 70 now. The record is like 72. We're gonna get close to, if not near, the record for number of new all-time highs in a calendar year. And I know calendars arbitrary, cutoff point, but it's been an amazing. There's nothing wrong with just not making a new high all the time.
And I'd be interested to see I don't know, what the statistics are from previous, but what was the last time that we hit that many all-time highs in a year? What was the?
I'll tell you. Well, the all-time record is 1995. The year.
1975.
1995.
95. Oh,
yeah, that was the record. So not exactly a bearish indicator.
Yeah. Well, that's that's what I kind of look at too. Everyone's talking about inflation is the highest it's been since 1991, and then you look, what happened in the 90s, and it's like, okay, well,
it's pretty great, man.
Wasn't the worst signal for the market.
No.
But yeah, we've got a weird situation. Interest rates are nowhere near what they were back then, and the Fed had a little more leverage. But the Fed always has something in their back pocket. They've got plenty of magic tricks up their sleeves. So it's best not to fight them. But same thing on the Qs. I mean, if you look at this medium-term resistance, we're edging up towards that. It doesn't mean we have to fall back, but it's just kind of an area that has, the price has been riding up along for the last pretty much 14, 15 months or so. So this is another one that still, if you look at the daily chart, and this is kind of just doing the top-down approach. You always want to get an idea of what the markets look like before you jump into individual names, but you also want to know which individual names you're looking at. This doesn't really apply to your growth names that are getting slammed 20% over the last 2 weeks. This is applying to your larger cap names, your NVIDIAs, your AMDs, your things that really move with the Qs. So at this point, this is just kind of a retest of that previous resistance. And we still have this huge area of volume, including the point of control, but also this kind of shelf here that's being made up of this next volume node below. So definitely one of the uglier setups if you're comparing it to SPY today with this outside bar and at this point an engulfing candle on the daily. But you still have a lot of volume supporting price up here. So we'll see. I mean, the elephant in the room is definitely IWM. This is one that I think too many people were just waiting for that exact retest of this previous high, which is around.
Are we there? We're there right now.
Yeah, we're below it.
Oh no. Gosh, this thing, it can't catch a break, Jake. We had the breakout. It took a while. We got the breakout. Oh, now we're retesting. Now we're below the retest?
Yeah, but I mean, if you look at the so this is the way I kind of look at it. I generally like to use the Williams percent range as an indicator to get an idea of where the market is kind of at in terms of overbought, oversold, and the Williams percent range is one that can definitely signal overbought and oversold early, right? So like here, we initially signaled oversold on November 17th. And we continue to move down. What you want to use the percent range for a lot of the time is when does divergence start to play into the picture? Now, something I don't use the RSI often, but when I do, it is kind of sound like a Dos Equis commercial.
I was going to say.
This is when I like to pull out the RSI. So anytime that the Williams percent range and the RSI are oversold together, that's your really, really hard signal. So here, that's one. This was a pretty hard bottom here. Once again there, same thing, pretty hard bottom, short-term bottom. But you can see this is the only thing that kind of has me a little concerned is we are not oversold on the RSI yet. Now, what you can do is you can also optimize this a little more. Maybe instead of an RSI 10, you use an RSI 5 and kind of see what that's done in the past. And we are kind of oversold here. But the thing with oscillators is they can continue to remain oversold. And so you really just want to follow price action. This is the main kind of back test I'm looking at. We're still oversold on the percent range here. We're holding this anchored VWAP from the October 6th pivot. And that's kind of the main area I'm watching for now. But it is always a little concerning when IWM, which is generally a risk on kind of sentiment indice, is really not following through with the markets. And so this is the main thing I'm watching. We'd really want to hold around 230, which is also psychological level on IWM. And this would be the fourth red day in a row, which for IWM doesn't matter. Sometimes it can still keep going down, but I think it's just an overcrowded trade. Everybody was watching the breakout. Everyone's saying, oh, I'm just going to buy the retest and everything's going to be golden. That usually doesn't work too well. I've also seen people draw this area here more of a kind of a diagonal resistance zone. And, that would put this even in the around 230, 228 zone below. So that's another one that maybe not as many people are watching. They're just using this horizontal level here, which is giving people some problems. And that's what the market does. It can't be that obvious.
Why not? Out of curiosity here, I'm going to go look this up right now. Is GameStop still the largest holding in IWM? I think it is. Or AMC? Let me check right now. I'm just out of curiosity here.
GameStop
holdings. Either AMC is the largest holding in IWM, followed by Avis Budget. Oh, okay. That's great. So there you go.
AMC is interesting. I've been watching this one on the longer term chart. It's just, for me, I just can't understand the valuation. But, most people can't understand the valuation of some of these, dog coins that are $50 billion market caps and have no utility. So anything's possible. The interesting thing is AMC is consolidating at this previous resistance, long-term resistance, which is now acting as potential support. You've got this pennant here forming. It's hard for me to be too bearish on AMC or GameStop right now. And generally when AMC and GameStop are moving, that's actually when the market has shown some red flags. Is you kind of have these names that are moving, and you've got some of these hedge funds that are trying to short these names, and they're getting, absolutely destroyed. So when AMC and GameStop are ripping, it's not always the strongest sign for the market. Go back and look at February of 2021, January 2021. That was kind of the top for at least short term in the market for some names. And then you had, your Home Depots and those names just absolutely fly in March. But we talked about IWM as a risk on, risk off sentiment indicator, but to me, Bitcoin is the number one indicator. And this is actually one of the main reasons that I am a little cautious. And I know I was cautious last week too. I'm still cautious. I need to see Bitcoin looking very strong in order for me to have really strong conviction in the market, because Bitcoin is by far the best gauge of liquidity in the financial markets. It's gotten to that point that it is. Now, the thing that is a little concerning, and, something I look at, especially, when we've got this major move down and then you've kind of got this little bounce here, is you kind of have a little bit of a, I'm going to call it a little bit of a bear flag here. It's not perfect, but you can kind of see that we've got our initial move down. You've got your consolidation. Who knows? This thing could consolidate for another week or so. But this is, I'm looking at multiple time frames. This is the first red flag here, which is just the fact that we do maybe have a bear flag. But the main one I'm looking at, and same thing, this is divergence on the Williams percent range, has not steered me wrong a lot of the time. This is the concerning thing here. And I will change this because I use the Williams percent range 8 on the weekly to look back 2 months. I use the 10 on the daily to look back 2 weeks. This is called double negative divergence. And this is actually something that I learned about a week or two ago studying for the CMT. And that's the beautiful thing about the market. You learn something new every day. Double negative divergence is when you have essentially 2 divergences in a row. So here's your number 1 divergence. This is your first one. 1. So 1, 1, that's your first divergence. And then here's your next one, 1, 2. So you have 2 sets of divergence. You're hitting higher highs in 2 separate occasions while you're hitting lows on the percent range on those 2 separate occasions. So here's 1, 2, 3. And when we've had these types of divergences in the past, especially for Bitcoin, because it's just such a raw market, nothing's manipulating it other than supply and demand forces at work. And some people will say that's easy to manipulate, but it's just such an organic market. You don't have the Fed doing anything. You just have supply and demand. And this is the main thing I'm a little concerned about, is just the fact that we do have this divergence playing out, and you do have quite a bit of break-even participants in the market down here around 47. What does that mean? Well, it means that these volume-weighted average prices are essentially measuring the dollar cost average from these lows that we saw over the summer. And the average participant, let's just put it right in the middle here, is still up about 16%. So whenever you have a lot of people holding at a profit, that's generally when you get the biggest sell-offs, because everybody wants to take their profit at the same time when there's any sign of weakness. So Bitcoin, believe it or not, is actually the main reason I am a little cautious across the market, because I need to see Bitcoin strength, not weakness, if the market's going to continue much higher.
Jake, I was just looking at like a longer term Bitcoin chart. Do you think so? Okay, so earlier in the year, Bitcoin, we had like a 40% drop in Bitcoin, right? It went from like 56, right? It went from like 50 to, or no, it went from it went from like 69 to, I don't know, I forget where, but we definitely had it was say 65 to 30. Okay, we had like a 50% drop in Bitcoin. Do you think we'll ever, 50% drops are definitely like possible with anything, but Bitcoin used to have much bigger drops. Like after the first top in 2018, Bitcoin fell like 75-80% or more. Do we think like those days are over, where like do we think we'll ever see like 70, 75, 80% drops in Bitcoin ever again? Or is it just come too far now, and like moves of that magnitude are probably, because there's just people just want to buy the dip. So
yeah, one thing I've learned in the market is never say never.
That's true.
As soon as everybody's saying something never can happen, that's when it does happen. So I'm not here to say yes it can or yes it no, or yes it can or can't happen, because I don't have a crystal ball. I more or less just want to follow price action and let that price action evolve into my favor. But I don't think it's out of the possibility at all. I've seen some very, very prominent names say that Bitcoin's probably going back to 10 to 12K at some point. There are people that I trust with their analysis. They've been pretty spot on a lot of the time. And the fact that they say that is definitely worth noting,
Yeah.
But I just don't know. I don't know what that drawdown could be, but same thing here, you got to kind of take it as it plays out. First thing that I would note, you've got divergence. You've got this higher high in September than you did in February, shown by this upward sloping line. And then if you look at the current month here, you do have a downward sloping line. That's the first red flag for me. And that's why I'm pretty comfortable being in cash right now. Sure, maybe I sold the bottom, whatever. I'm very okay with that, because the odds, in my view, are not in my favor right now. Monthly, if you look at the monthly seasonality since Bitcoin kind of was on Coinbase, December has a 33% win rate. So December is actually the second lowest win rate for any month of the year, going back about 7 years. So we're not it's like playing blackjack, right? You're playing blackjack as a function of odds, and most gambling games you are. If you don't have an edge, or the odds are not stacked in your favor, there's no point in trying to press those. What's more annoying than going on a heater and then literally blowing up every profit you made just because you thought that probability was going to keep going actively. Probabilities change, and we have to look and see, is the market stacked in our odds? Negative divergence on the monthly, not stacked in my odds. December having a 33% win rate, not something that's stacked in my odds. And I'm not even trading crypto. I simply use crypto as a risk on, risk off proxy in the market. And that's why I am cautious on the broad markets.
Let's do some questions from the chat.
Yeah.
BNZNB is asking about Boeing. This one's had a couple of positive headlines in the past couple of weeks.
BNZ and what?
Boeing.
Oh,
BN.
Boeing. I thought you said BNZ.
Yeah, BNZNB is the person in the chat.
Oh, okay. I was like,
Benzinga.
Ticker. Boeing, yeah. So, this is when I start to look at the monthly charts. I generally even start looking at the monthly charts going into the second half of the month. Not because I'm going to make any type of exact trade on them, but I still want to see, is this an outside month? Is it, how is it forming? So the first thing that I would do is look at the seasonality for Boeing. And I'd probably pull this back to January of 2009 because that's when the financial crisis was. And November, December are relatively strong months. You can see November is still green, barely. And the next thing I would do is I'd look, okay, since the COVID lows, where's the majority of volume holding? Well, you've got two pockets of liquidity here. You've got quite a bit of volume holding from around 210 to 230. And then you have absolutely nothing here. You've pretty much got like what I call volume gap, essentially a void in supply and demand. And then your next level of liquidity comes in around 175 all the way down to around 150. And what I mean by liquidity is there's a lot of volume that's been transacted there. And the thing that concerns me about Boeing is, volume shelves are great. This is what I call a volume shelf, but the price needs to be above the volume shelf. If the price is like earlier this month when we were at 230, that's a good sign. We're above a lot of that volume. Now we're below it. So all of these shares holding at 220, 215, 230, they're now holding at an unrealized loss. And that puts selling pressure on a stock when you've got all that overhead supply above. So Boeing on the monthly wouldn't pass my kind of test right here. On the weekly, we still kind of have this symmetrical triangle forming. We tried to break out last week, and now we're kind of back to that support. So that's kind of a neutral one. And then if we go to the daily, looks like a barcode. Yeah, not a ton going on here. Just up and down, zigzag. So to me, there's no edge if I'm looking at the chart on Boeing.
Fair enough. Jai Particular's in the chat. We got a few more minutes with Jake Wujastyk from TrendSpider ripping through his charts right now. What's wrong with GrowGen, MW, man, it's cannabis. All right. I don't know what to say, man.
What's wrong with GrowGen?
This is a favorite of Jake's, and
this is the thing I think a lot of people sometimes don't think about, right? If you're looking at an individual name, go look at all the other stocks in the sector. If that name is performing poorly, you have to go look at it's not. I promise you, it's not just the individual name. Go look at any growth names today. They're brutal. I mean, but yeah, this is a long-term hold for me. Maybe it invalidates itself at some point. I know people are a little concerned about their management, all that, but GrowGen is one. Kind of the same thing as Litecoin, right? Like I've only seen Litecoin actually used in a realistic setting. That's why I initially traded Litecoin back, a year or two ago, because I actually saw the utility and how it was used. GrowGen, same thing. I'm very comfortable, and GrowGen's the only stock, weed stock that I own long term. And I've got a drawdown, but if I look at the proportion of the capital in GrowGen versus some of the trades that I take on a week-to-week basis, it's literally maybe 2% of, probably less than that of the total capital that I have in the market. Nice. I have it for my son. It's a long-term thing. But
nice.
This is what I'm looking at on GrowGen, and this is why I'll probably add around 15 or so. So 5 red months in a row. Could do another red month, we'll see. But this is what I want to see, right? If we look at since this 2018 low, we are now back to where a lot of volume is back to break even. So this is where supply dries up, and this is where I'm looking for maybe some consolidation. And I'll just play it by ear. This is one that actually looks decent in the marijuana crowd. You're still hitting higher lows since 2018. You go to something like, Tilray, and you're still hitting higher lows since we bottomed out in 2020. But if you're looking back, from I guess when did this IPO back in 2018, we're at lower lows. So yeah, these weed names, this is just what they do. They will literally bring everybody in, spit them out, and then everybody comes back chasing them. I'm not sure if we're ready here, and that's why I did stop out of some of those names today. But they're still on my watch list, and when they get hot again, then I'll probably look at maybe adding. But this is the thing I'll say on Tilray, at least. From this high back in 2018, you have a lot of volume holding here. Like most of the volume is holding from around $8 to $14. That's a huge range, but if you look at the range of Tilray, it's got a pretty big 2-year range. But yeah, GRWG, just kind of sitting on that one. As I mentioned, it's not a massive position for me, but it is an investment long term. But this is the kind of chart I like. Move up, pull back, still higher lows. And if you're just using basic technical analysis, we're pretty much just retesting the highs from 2018 and 2020 here. So that's my take on GRWG.
I love the point that Jake just made. People, with regards to GrowGen, people overestimate the randomness of stocks given movement. Check the sector, check its friends, check its peers.
Yeah.
If you're looking at a bank, check the other banks. Just give an idea. Are they all down? All right. It's not about you.
That's why exactly. And that's why I'd always recommend people to have 100, 150 stocks on a watch list, not to watch all of those and trade them. I only trade like 2 or 3 stocks at a time, but to get an idea. I always see people reaching out. Hey, why is Fubo down? Well, go look at the other growth names. It's not just Fubo,
It ain't about you, dog. It ain't about you.
It's a bigger movement than just an individual name. So that's my thoughts on kind of how you look at the markets. You got to look at the overall rather than just look at the individual names.
Jake Wujastyk is from TrendSpider, joins us every single Monday. Here's a promo code, and Jake, happy Thanksgiving. And I'm off next week, but AB will be here, I think, hopefully. Will you be here, Aaron? And happy holiday, man. And
you too.
And we'll talk to you. All right.
Yeah, absolutely.
Have
a good one, guys.
All right. AB. Wow, nice transition, Rohan. What's up?
It's getting dark outside, or it looks dark on the screen.
Yeah, well, it's getting darker. I don't know. It's 1:30.
We can see the first few ice skaters out there.
Yeah, wait, zoom back out there. Look at those skaters. That'll be me and you. One day we should do a show from the rink.
My goal is to learn how to hockey stop this year. So if we have any viewers out there that can help me along that journey.
No, me too. Not just him. Me too.
Yeah, help us.
It's been on my to-do list for like 15 years. Learn how to hockey stop.
Wait, yeah. So run me through this. Next week, I'm alone?
Just for Monday.
Oh, okay. Yeah, I can handle that.
Okay, just Monday. I'll be back on Tuesday. Okay.
What's the plan for? So I know you said no show Friday.
No
show Thursday.
Thinking no show Friday, no show Thursday, obviously.
Wednesday.
Full show, baby.
All right.
Wait, are you going to be here?
I might be joining from home.
Oh, all right. We'll figure it out.
We'll figure it out.
Yeah. All right. Last guest of the day. Who do we got?
We've got Chris Capre from Second Skies Trading. You know him. You love him. We're going to be talking some options. Looks like we got a fresh haircut too, Mr. Capre. Without further ado, let's bring Chris on the stream. Chris, how we doing?
Very good. And yourselves?
Pretty good. I'd be better if I got a fresh cut like you did.
Chris, do you know how to hockey stop?
No, I actually gave up hockey early on because I just had a hard time skating, and I was like, I'll stick with soccer and baseball. I'm cool with not smashing my head against the ice. It's
yes, yeah.
Funny story though. I did go on a first date with somebody back in. So when I was a broker after Wall Street, they transferred me to the San Francisco office, and I went on a date with somebody to the local rink when I was living in downtown Union Square, San Francisco.
Yeah.
And on that date, she just happened to be like a badass skater. And so I ended up losing the bet. We were like chasing each other around the rink, and I hit the divot where the goal was, ate it, and actually gave myself a concussion on the date. So I like had like a swollen head the rest of the day. So I literally had to walk with her on one side of me so she didn't see like my swollen head on the other. But I was like full on like concussion and everything. So after those situations, I'm like, yeah, skating's not for me.
Stick to first dates at the movies, not the ice rink.
Seriously. Although, it'd be cool though. You guys should do a show on the skating rink, holding a laptop and skating and making a day trade while you're doing it.
For sure. Yes, let's put it on the to-do list. So
that would be some serious skill points.
We can do that. Okay, nice. What's on your radar here today?
Apple. Hard not to look at Apple right now. So Apple is showing strength in a period today where a lot of the market is showing weakness. And as I was telling my members, early this morning, keep an eye on VIX. If you start seeing VIX spike, you could probably see a material amount of weakness come into the market. And VIX did that. VIX had like $1 pop in like 20 minutes, which is not common for VIX. My senses, my spidey senses were starting to get into low liquidity already today. But in a day where a lot of things were falling off, Apple has held its strength. It's holding on to gains on the day. And that tells me that there's real inherent strength in it. So, look at Apple on the day. It's up, it's not up huge. What is it, up a few percent or whatever? It's up a couple percent. But what I like is that now we're in the second week above this all-time high breakout. And so, oh my God, am I not sharing the darn screen? You're supposed to.
Yeah, I know. I was just about to, but I knew you would catch it on your own. So let's get that screen pulled up.
There it is.
Yeah, this is one that I pointed out on the show last week. We were sitting at this kind of resistance. I believe it was 151.40. Remind me, chat. 156.40, something like that. And I was like, if we break through this, we got blue skies ahead. So I actually played some Apple calls last week, made some good money on them. But like you said. Well, now that Apple's the biggest company in the world, seeing a 2% move, it's not something to sneeze at. It's for Apple, and any move over 1.5%, it's like pretty significant.
Yeah, you got to remember Apple is one of the largest holdings in the Nasdaq, in the S&P 500. Pretty much every single hedge fund and mutual fund on the planet has exposure to Apple in one way or another. It's a large option trading stock. There's a lot of options on Apple. And so I'm just looking at this. Yeah, you're right. Anytime you have a 1.5%, 2%, Apple's not it's not like a Spotify or Roblox or something that's going to do 10, 20% of the day. It just doesn't do that. Apple is one of those stocks that you get at 1.5%, 2%. It's a solid move. So I'm looking at this. We've cleared out the all-time highs, closed very, very high, which means that very little people were taking their foot off the gas going into the weekend. That basically means that when you have no wick to the top side here, there's very little profit taking. And so we see this nice gap to open, a little bit pop up, holding the gains to start the day. And so I feel like there's a really good chance that Apple, closes strong on the week, and 2 weekly closes above the all-time highs. That would suggest traders are comfortable with Apple at these new prices. So when I look at Apple from let's look at some smaller time frames. Let's take a look at this kind of 4-hour chart here. I feel like looking at Apple positioning right now. So Apple has roughly, prior to today, about 4.1 million calls and 3.4 million puts. So you're talking 7.5 million options out there. The next biggest expiry isn't until January, the January monthly OPEX. That tells me that this breakout is not happening per se on this kind of like massive gamma squeeze for these short dated options. No, there is people, the longest strike or the next biggest strike by expiry is January. So nobody's really day trading this Apple stock and causing this push. This has sustained long-term bullish interest at these prices. And so when I look at that, I feel like Apple is in a very good place right now. And I feel like any pullbacks are solid buying opportunities. So I'm watching 160. Let me pull back to the 1 hour here. I'm watching, kind of this. You see how there's this nice liquidity here, right around this kind of 160, 161. That's going to be the first area I'm going to consider a potential long for calls. The next area I look at is this area right here between like 159 and 157. So I wouldn't do full size here. I recommend partial size here. Save a little bit more in the battery and the tank for here. And so I think there is a chance we could get to 157, 159, maybe this week, maybe next week. You know, with liquidity being thin, it's certainly possible to get that move. But I feel like Apple's in a position where I wouldn't want to day trade this, and I'm not seeing the majority of options are not being day traded. I'd rather get long Apple calls, probably January expiry. You know, if you have that many options, about 18% of the options right there are expiring in January. So I think that this thing will have a nice move into January, and then you'll see the board kind of reset. So I'm looking towards long calls with the January expiry on this.
So do we have any like catalyst that we think can help Apple stock move one way or the other over the next couple months? I know we've got the holiday season, obviously, but we won't be able to see Apple's sales on the holiday season till the following quarter, correct?
Yeah, their next earnings isn't for a while out. So you're talking late January. So, you know, you can generally expect that their sales are going to be good. You know, you got Black Friday week right now. Then you got Christmas and all these sales. So sales will probably be strong. I think some of the best news that could come out for them would be on the car front. Any more news on that Apple car front is huge because that is a whole new vertical for them. You know, and we noticed that the news came out this week, you know, on the breakout week that it broke the all-time highs that, hey, it's 100% Apple car is, you know, they've been kind of secret about it, and they're like, okay, it's official now. And so, yes, they are working on it. They took one of Tesla's top engineers, you know, and so it's clear, and they're filing for patents. It's clear they're working on a car. I think any news on that is very, very helpful. I think another potential news catalyst to watch out for would be any sort of move into the metaverse talk, you know, saying, hey, we are looking to create, you know, metaverse spaces as well, or metaverse nodes as well. And here's how we want to do it. And I think in some sense, if it was a competition between Apple and Facebook, I think Apple wins because Apple has a much larger ecosystem and products that people integrate with. And Facebook really has one. Nobody looks at the Oculus VR as a major vertical that people integrate with and, you know, kind of interact with. But Apple, you have so many things. You have the phone, you have the watch, you know, you have all these different things that you can interact with. And so I think if they were to do any talk about that, that could be a great potential news catalyst.
Got it. Yes. So anything else on the watch list right now outside of Apple?
Yeah. How do you not talk about Ford? Ford is, I had some of my students that were taking this breakout of this channel. I hope they're still holding it because this is a monster trade. So Ford is having an incredible run. And so if you look at this, you know, look at this just huge amount of volume. I mean, how many weeks bullish is this? 1, 2, 3, 6, 9, 10 out of the last 11 weeks, assuming this week closes up, are bullish. That's enormous. That's an enormous amount of buying pressure on it. So this is not just kind of, you know, like Wall Street bets type meme thing. This is like legitimate, a lot of interest across the board. And, you know, they had their report recently coming out about the Mach-E, their electric vehicle performing better on quality tests by Consumer Reports than Tesla. Like Tesla was second to the bottom of the list and the Ford was the highest rated EV. So they just keep getting more and more positive news in their favor. Today alone, strong amount of shares, 87 million, almost at the 10-day average. And so I look at Ford and I'm sitting there going, okay, you know, we've cleared out these major highs here. We've cleared out these highs here. Now really we're working our way into this kind of 22, 24 range, you know, as the next major resistance levels. So I feel like Ford is one of those things that we got to start getting long on pullbacks. So looking at the option space on Ford, again, another high volume option stock. 3.5 million calls prior to today and 2.5 million puts. So you're talking 6 million plus options. And I think today they're already cracking over 650,000 options on the day or 630,000 options. So strong options volume on the day. Now, Ford is also very much like Apple. The next biggest expiry in terms of options is until January. That means that the views that are being expressed in the options market in terms of largest concentration of expiry is long dated. It's not this week. It's not next week. It's not a month out. They're saying, hey, we have a fair amount of options that we are willing to express these views out till January. And, these are some, there's some strong bullish views. So when I look at Ford has a little bit better structure. Looking at the 1 hour chart, you can see this nice range here. Let's draw it out. Nice corrective structure at the highs. I feel like if Ford gets any dips into 1940s, 1930s, I feel like that is a great place for long calls. And so if I was to do it based on this structure, I would probably do it maybe the December expiries, but then I probably would mix it up with some January expiries, buying maybe the 19 or 19 after 20 calls on this. And so I like Ford. I think it has maybe a little bit of short-term resistance here, but I feel like pullbacks to 19, maybe 18, maybe 17 and a half. I think that's as far as Ford goes on a pullback. And I think if you get these prices down here, that'd be a great area to get calls, get them out to the January expiry, should be in a good position. So first area, low 19s. Second area, I like, this kind of mid 18s. And then 1750, I think, is fantastic. If it gets there, I think it's an amazing price to buy.
Beautiful. Yeah. I mean, I'm still long Ford. It's in my long-term portfolio, so I love this stock. I love it going forward. I just saw a headline out a second ago saying that the Federal Reserve must be a leader in fighting climate change, U.S. President Joe Biden says. So maybe some of these kind of, clean tech names will get a boost from this if the Fed is going to kind of flex its muscles in the ESG space.
Yeah. And Ford is, of the U.S. automakers, besides Tesla's U.S. automaker, they are pushing the heaviest into the EV space. So, they already got a vehicle that's selling very well, the Mach-E, and they're going to keep pushing in that direction. So I think, I like them going forward. And you get a great dividend with Ford, 2%. It's not gangster, but it's robust. 2% isn't bad at all.
I think any automaker out there that's focusing on the electric pickup trucks are obviously the best selling vehicle in the United States. So I have more interest in companies that will be able to kind of attack that need for electric pickups. So whether it's Ford with the Ford Lightning pickup truck, Rivian, they obviously have the electric pickup trucks, and we're yet to see what's going to become of Tesla's Cybertruck. So I think any company right now that's, fighting for that Tesla market share through the pickups is a good buy.
I have to agree with you. And I think Ford is best positioned for that right now. Just because you got to understand that Tesla hasn't produced a single Cybertruck. Nothing's come off, any lines or anything like that. They're not producing anything. And so, that tells me that they're having problems. Whereas Ford, one of their strengths is production. They know production, manufacturing inside and out. And that's always been Tesla's weakness, has been producing enough vehicles, getting, the consistency with that. They definitely don't have the same production manufacturing skill set and experience as a legacy automaker like Ford. So if they can start rolling out Lightning soon, and really start cranking that out, they might put a huge damper in the Cybertruck sales before they even get onto the road.
100%. I agree 100% there. Speaking of legacy automakers, I have been looking at Volkswagen as well as Toyota, just because I feel like these companies are kind of being overlooked right now. Like I think you would have to be insane to think Toyota is not going to put out a fully electric Tundra pickup truck, in the next 3-4 years, whatever. So I think we'll have to look at what's going on with the Volkswagens, with the Toyotas, when we're talking about Tesla and Ford.
Yes, for sure. Absolutely. I mean, I haven't heard much on the Toyota front yet in terms of the EV space, and you haven't heard a lot of headlines on that. But, Toyota is known for, I used to actually work for Toyota like many, many years ago, like over 2 decades ago, and their trucks are amazingly solid. So they have body on frame design, and, the Toyota truck, they have some that have gone 1 million miles. That's, absolutely insane for a truck to go that long. They're Land Cruisers, they're Forerunners, they're all body on frame design. And that kind of gives it like a long-term viability. Their trucks, their Tundras and everything like that, they are known for being very robust trucks. So as soon as they're able to translate that success in their truck space to EV, that puts them in a really, really good position going forward.
Yeah, 100%. And I love, I drive a Toyota myself, so I have like brand loyalty to Toyota. But like I said, I just think, not a lot of people are talking about it, but I would bet my bottom dollar that within, 3, 4, 5 years, we'll have a fully electric pickup from Toyota, Tundra. I don't know. And it's already, the Toyota trucks do perform well in the States, but a lot of people want to go out and buy American. So they'll buy a Ford, they'll buy a Dodge, whatever it is. All right, Chris, I don't want to take up too much time talking about cars. So moving on from Ford, what else we got on the watch list?
We got one other, and then we can do some open Q&A. AMAT. So AMAT is Applied Materials. They are really in a good position, with the infrastructure bill going forward. And so they're going to be building a lot of the materials. A lot of the infrastructure plays are strong today. You look, a lot of metal, like X is strong today. A lot of mining things are strong today. A lot of materials are strong today. And I like AMAT. They give a little bit of a dividend, not much to write home to mom about, but something. And so, they're kind of in this position where they also broke all-time highs. I think it's all-time highs. Yes. And so they broke that. We're in price discovery phase relatively now. And so, now we had this 2-week breakout. We're pulling back a little bit. And so I feel like as we get into this 140, 145 zone, AMAT becomes a solid buy. Looking at the options market on AMAT prior to today, you had about 160,000 calls. You had about 216,000 puts. So you're talking about, almost 400,000 options on the stock, with 17% of that rolling off in the December OPEX. So no short-dated options to worry about. And so the majority of options on AMAT are relatively spread out over a lot of strikes. So the gamma curves on this are really not leaning up or down. So it doesn't really have a whole lot of resistance, and it doesn't have a whole lot of support overall in terms of gamma positioning. But I see a range between, say, 145 and 160 holding over through the December OPEX. So if we can get this nice pullback, let's pull into like a nice 1-hour chart. We can see the chart is breaking down a little bit. We had the spike into 145. Nice bounce, weak bounce. If we can get this roll down into like 147, 146, I'm interested in getting long calls for the December expiry. So I feel like 145 to 160 will be your range. Unless some bad news happens out of the infrastructure bill, I feel like this stock is poised to do well over the coming month. And so I'd like to hold it. So I'm thinking either long calls or long bull call spread on this through December 17th OPEX.
There you go. AMAT, ticker AMAT. Looking at the long calls there. All right, Chris, let's see what we've got going in the chat. Option printing saying Facebook is rallying. Let's take a look at, what do I call it? Meta? Facebook? I don't even know anymore.
Let's just call it Facebook. I'm not going to let them get away with changing their name because they want to avoid bad press. I'll call them Facebook every single day. Mark Zuckerberg lives on the other side of the lake from me. If I see him, I'll be like, hey, Facebook. I'm going to harass that guy.
Yeah, I mean, who knows? Maybe in, I don't know, 5-10 years, we'll be like, remember Facebook? And everyone calls it Meta now. I don't know. But who knows? Maybe the Facebook name will stick around longer than they would like it
I
to.
hope so. I hope so. Eduardo Gonzalez is saying, great call, Chris, on snow last week. Didn't listen and now is down 6.5%. Now I'm listening, very closed. Good. I'm glad to hear. Appreciate it. Yeah, snow was going to hit that all-time highs. It's pulled back on the week. So, yeah. We can take a quick look at snow just to kind of check it out. And we'll just do some open call-outs. Yeah, down heavy on the day. What is that? 6%, down $26 on the day. Let's take a look at what's going on. I mean, as I mentioned, you're hitting that all-time high. You're getting really close to this. We said it would probably go to like 400. It would probably top out there. It's now down. So where do I see snow from here? 16% of the options are rolling off for December OPEX. There's not many short-dated options this Friday, which is kind of not surprising. It's the first week after the November monthly OPEX, and so it's not really that big an expiry. I feel like 400 is going to still stay resistance. We're coming into an area where it might start to find a little bit of support between, say, 353 and 345. So let's take a look at that in the charts. So, yeah, what is that? 343. Yeah, okay. So 343 is right about here. So when we start to get to this price, the gamma starts to change where the dealers are trading in the hedging requirements actually start forcing dealers to buy. That means they're trading into the market. So if the market is selling off into this, when we start getting to here, dealers start unwinding their short positions and actually start to hedge, possibly getting long stock. And so that means if the stock's selling off, they'd be trading into the market. And so I feel like that might be a solid location for kind of like a 1 or 2 week trade on snow. So watch for a potential bottom around here. There is some positioning around 353, which I mentioned, which is the low of the day. So there's some of that change happening. But I feel like once we start getting to 345, 343, the downside moves will struggle a little bit to get past that. So I wouldn't want to be long snow at this point in time. I wouldn't want to short it right here, but I get very interested around 343, 345.
Got it.
Okay, what else do you want? You can just do the call outs, whatever you want.
David Wilson's asking about puts on Hood or Activision. Robinhood has just been getting hammered down. I think it's at like its all-time lows right now. But the thing that scares me with buying puts on Robinhood would just be if crypto takes off again, then obviously, Hood gets a nice little sympathy play from that.
Okay, so I'm assuming, David Wilson, you're thinking long puts and not selling puts. Can you confirm that in the chat? That would really help. Because you say puts, but it doesn't tell me whether you're thinking long or short puts.
Yeah, I believe he's talking about long puts on Activision and or Hood.
Okay, let's look at Hood. All right. Poor Hood. It is not all good in the Hood. So, decent option stock, 400,000 calls, 146,000 puts, very call heavy, probably because of the millennial attraction to it here. 24% of the options are rolling off this Friday. And if there are more calls than puts, then that's going to create some headwinds on Hood as we get later in the week. Now, looking at kind of where things are, what are we at, 2783? Yeah, I think around 25, some of this selling will start to slow down. I think 25 is where you start to see some of this selling slow down. And so if you're already short, I would probably want to be taking profit as soon as you start getting close to 25. I do feel like any weak pullbacks this week, if you can get a weak pullback over the next few sessions into, you could maybe even to 30, but that would be a little ambitious. Here, this is what I'm seeing in terms of my levels on option flows on Hood. So I'd like to short on weak pullbacks into 30 with the majority of size at 33. I don't see it getting past 33 this week unless you have some positive news catalyst. And so, yeah, short that, start taking profits as you get into 25. 25, it'll be harder to make downside gains. And so that's why I like waiting for a little bit of a pullback and getting short. But yeah, hard not to be bearish on that.
Yeah, like I said, I think if we see, and a lot of people are talking about this with over Thanksgiving, people are going to be talking crypto again. If we see users rushing to Robinhood to buy Bitcoin, buy Ethereum, buy Dogecoin, that's what I could see interesting about Robinhood. But yeah, right now, chart looks ugly to say the least.
Other than a few rallies here and there, it's just consistently making lower lows. Decent few day rally here, but weak bounce off that same level, breaks through. You get a rally, but It's just, I mean, if you look at this chart since August, if you were selling 3 out of every 5 days on Robinhood, you would have been making money. You could have just randomly thrown a dart on the board for that day and been like, okay, I need to sell 3 out of 5 of these days here. I'll pick any of these 3-5 days. You would have been making money, pretty consistently on that. So it's not able to catch a bid. There's nothing in the options market right now that suggests this thing's going to turn around. It's all pointing to bearish signs for Robinhood.
Got it. And I'm seeing a couple more good ones in the chat. We'll probably only have time for one more. Sure. Let's see. I see Martin's asking about Scott's Miracle Grow. We've talked about that one before, Chris, and I know it's not a gangster stock to trade options on, so let me try to find one that is.
Yeah, sadly, most cannabis stocks are not that great for options. It's just not they don't have the movement, and they don't have the responsiveness that.
All right, since Martin asked about SMG, and we're not going to do that, let's do PayPal for Martin.
Okay. Victor also asked about PayPal. So
there we go.
Let's pull up PayPal. All right. So PayPal has, prior to today, about 870,000 calls, 680,000 puts. That's what, 1.55 million options out there. Not many options rolling off short dated. It's mostly December OPEX expiries kind of thing. So you don't have to worry about anything short dated hemming it in. Right now, PayPal is bearish. I mean, I'm not looking at the chart, but just from an options perspective, it's bearish. And so where would I start to short PayPal? So where are we now? What was the low on the day? Close to 184. Yeah. I would look for weak pullbacks to like 200, 201. And then beyond that, I think it's going to have a hard time getting beyond 200 for the week. Yeah, outside of a new catalyst. I mean, it beat earnings and it's just been down since then.
So you're saying if it gets back up to 200 that you'd look at some short positions?
Yeah, I'd look at either long puts or a bear put spread. Assuming it's a weak pullback. If it's like an immediate ripper, like an impulsive rip, then I would need to look at the intraday charts and see it start to transition there. But if it starts pulling back correctively into 200 this week or maybe even next week, I would look to short that. Either get long puts or long a bear put spread. Yeah, I'd look to short that. I think this has got, I think 200 acts as resistance, and I could easily see it returning back down to 185, 190. So, you'd have $10, $15 worth of room to trade on that to the downside, $2, $3 stop to the upside. I think it's a workable play.
Sounds good. Yeah. So there you have it in PayPal. Still bearish, but if we see that kind of, not pull back, but if we see it come up a little bit, then we can start looking at those short positions again.
Yeah, Toronto, on a weak pullback. We want to look for a corrective pullback. Toronto the Great had a quick question we can answer super quick. Which are the best index funds to trade options on? The metas, SPYs, Qs, IWMs. Those are fantastic. They respond in many ways. These index ETFs respond more to options than they do to the actual flows. Like if you look at IWMs on the day, it's below its average 10-day volume, but option positioning dominates on these stocks. And that's because there are a lot of institutions trading these. A lot of them are trading them via options, particularly SPYs, Qs, and IWMs. And so if you want to trade index ETFs via options, these are your best. Great liquidity, great spreads. Option flows are very robust because you have so many options. The data points are really, really strong. So once you get a good read on the option and dealer flows, you should be able to read support and resistance levels on this very, very easily. So yeah, those are the 3 best you should do.
There we go. All right, Chris Capre from Second Skies Trading comes and joins us every Monday. So if you like Chris's content, check him out on the show with us on Mondays. He will also be putting out some articles with Benzinga, so make sure to check those out as well. Chris, where can folks find more from you?
Second Skies, Forex.com. Also right now, we are offering a Black Friday, our biggest discount of the year, 30% off till I think this Sunday or Monday. So I'm putting the coupon code in the chat. I hope you can take advantage of it if you want to learn about our option strategies and how we trade options or a live trading masterclass. So other than that, you can also see our articles on Benzinga. I write for them now every single day.
Beautiful. All right, Chris. Well, enjoy the rest of your Monday. Have a great holiday and looking forward to next week.
You too. Happy holidays and be well.
All right, y'all. That was Chris Capre from Second Skies Trading.
Is my mic on, Aaron? Do we know?
But can you guys hear Spencer?
I don't think they can. They can't hear me and they can't see me.
We're getting the 1 minute signal.
What's up with that? Oh, now they can hear me.
Now
but they still can't see me. I mean, that's fine. Whatever. Oh, look at that. Cool. It's 2:02, man. We're going way over. We didn't even do a crypto update. Bada bing, bada boom. There's your heat map. Get some free crypto. Go to Voyager. Download the app. Fund your account with $100. Make your first trade. Boom. They'll give you free Bitcoin. That's how easy it is. Okay.
Beautiful. All right, y'all. That'll be a wrap for us today. We will be back live tomorrow at, 11 a.m., 11:30 a.m., noon Eastern.
Somewhere in that.
To be determined, but we will be back live tomorrow at some point. Please smash the like if you have not already, and enjoy the rest of your Monday, and happy trading.
Moon or Bust live right now.
Boop, 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 boop.